It is my distinct pleasure to welcome you to the 17th Annual Global Business Conference. I am Robin van Puimbroek, Executive Director of Business Development of the World Trade Centers Association, and I will be your MC for today's conference. The World Trade Centers Association is an international trade organization with a mission to not only facilitate trade and development, but also to foster peace through trade. We are an incredibly diverse and interconnected organization with 320 World Trade Centers in nearly 100 countries, and we proudly cherish this diversity as a strength. We stand for tolerance and embrace the many cultures our organization represents. Today's conference will focus on thriving with change and adapting to today's international business landscape. Needless to say, there could not be a more relevant topic to discuss. Before getting started, a few brief housekeeping matters. I'm sure you will have many interesting questions for our speakers and panelists. Please field your questions at any time using the chat feature. The agenda of today is available on the website below your screen. Now, without further ado, I have the privilege to introduce someone who needs no introduction. A dear friend, Linda Conlon, President of the World Trade Center Greater Philadelphia. And I would like to use this opportunity to also recognize Linda's remarkable career and accomplishments in international trade, trade finance, and public policy, as well as her distinguished public service. Linda, over to you.
Thank you, Robin, for that very, very warm introduction, and welcome virtually to Philadelphia. We are so fortunate to have a senior representative from the World Trade Centers Association to lead us through the program this morning. And we consider the diverse cultures within the city and the region, including our vibrant Asian American community, to be among our greatest strengths. So we share the commitment of the World Trade Centers Association to diversity. Welcome everyone to our 17th Annual Global Business Conference that is being held in partnership with Temple University's Fox School of Business and its Center for International Business Education and Research, or CYBER. This year's conference theme, as Robin pointed out, is Thriving with Change, Adapting to Today's International Business Landscape. Well, indeed, adapting we all have. Today, I'm delivering this welcome message from our office at One Penn Center in Center City, Philadelphia. But like the rest of our team, I continue to work remotely. I have to tell you, I miss those friendly eyeballs in the audience, and we all miss being together. But like so many organizations, we have managed to thrive and be successful during this time. In fact, in 2020, we created new educational and networking events, completed some 165 projects, assisted 105 clients, attracted over 1,300 attendees to our events. And most importantly, we helped international companies generate some $104 million in export sales. But you can see all of this for yourself by taking a look at our just released 2020 annual review that is available at our website, wtcphila.org. Now, I know many of you in our audience know us and know us well, but for those of you who don't know us, in our almost 20-year history, we've been assisting international businesses in southeastern Pennsylvania and southern New Jersey grow their global business, helping to expand jobs and the economy in our region. There's one number I just love to say, over $2 billion. That's the amount of increased export sales generated by these companies since 2002, with the assistance of our knowledgeable trade specialists. That supports over 26,000 jobs in our region. And this year, we look forward to unveiling a very new program to specifically help minority and women-owned businesses who have been among the hardest hit during the pandemic. It has never been more important for our region to have a World Trade Center to help small businesses navigate through these challenging times, to reach new customers in promising markets around the world. Well, today, As is our tradition, we have lined up a great roster of speakers who will address the challenges, the triumphs, and the outlook for global trade in our region. So relax and get ready to learn how your business can thrive through change. But before we get started, I would like to thank, as I always do, the people that really make this conference possible. Our entire World Trade Center team, led by our event producer, Graziella Denuzzo, our sponsors. You can see their logos scrolling throughout this conference. You know, as a nonprofit, we rely on the support of our sponsors and members and partners like Temple University today to deliver the quality information, the experts, the senior government officials, the practitioners to help you successfully navigate international business. Yes, even during a pandemic. And now it's my pleasure to introduce Ronald Anderson, Dean of the Fox School of Business at Temple University.
Welcome to the 17th Annual Global Business Conference. I'm Ron Anderson, Dean of the Fox School of Business and the School of Sport, Tourism, and Hospitality Management at Temple University. I want to first thank the World Trade Center of Greater Philadelphia for joining us as host, and I would like to thank CYBER, our Center for International Business Education and Research, for sponsoring today's event. I want to also thank all of you for being here today. Events like today are so important to our identity as a school. At Fox, we are thoroughly committed to providing our students with professional development opportunities that are relevant to today's digital global economy. That describes the Global Business Conference to a T. We envision the Fox School as a place for innovative education and as a change maker for its community, including the international business community. Through CYBER, our international business programs, and conferences like this one, we work to ensure that tomorrow's business leaders are equipped to lead their industries well into the future. The way we do business is rapidly changing. That's been the case for years, but especially the case during this past year. We want to empower you as students and future professionals to become agile problem solvers, able to adapt to the ever-changing global markets. We also want you to become leaders, capable of moving the business world and community forward. The immediate future for international business community is still unclear. Last year brought new and unprecedented challenges to the global marketplace, and it served as a reminder that drastic change can occur at almost any time. That's what makes the theme of today's conference, Thriving with Change, so appropriate. Change can be daunting, but as you'll learn today, change is good too. The key is being able to adapt. I have no doubt that's the skill that all of you possess. Once again, I want to say welcome, and I thank you all for joining us today.
Good morning, ladies and gentlemen. On behalf of the City of Philadelphia and Mayor James Kenney, welcome to the 17th Annual Global Business Conference. I want to thank Linda Conlon for the opportunity to speak to you this morning, along with all the speakers today and our partners who are here. As the city's new Commerce Director, I'm excited at the prospect of working together with everyone here to help Philadelphia rebound and thrive economically. Every day since the pandemic began, the Philadelphia Department of Commerce has been hard at work supporting our businesses, both large and small, and helping to drive the city's economic recovery. I want to thank the World Trade Center of Greater Philadelphia and the Temple University Fox School of Business and its Center for International Business Education and Research for holding the 17th Business Conference. I firmly believe that trade, especially export trade, can stimulate inclusive, equitable economic growth and strengthen our international standing and create quality jobs as well in Philadelphia. The key stat that showcases trade's importance to Philadelphia is its importance for growth. 95% of all consumers in the world are outside of the United States, but less than 1% of American companies export. We'll work to increase that number locally by providing education and technical assistance for our businesses to explore foreign markets. Homegrown companies know all about the importance of export growth. For example, Philadelphia's legendary Bassett's ice cream entered the East Asian market several years ago, and with our support, it expanded to Taiwan just before the pandemic, and it has thrived there even during the pandemic. Philadelphia has a strategic location for trade, logistics, and for distribution. We are optimistic about the future of Philadelphia and the trade opportunities in our region. At Commerce, we'll continue working to connect our local businesses with the world by promoting Philadelphia as a global business destination. And we look forward to collaborating with you to assist entrepreneurs with the latest resources on global trade. Thanks to all of our speakers today and the panelists for sharing your valuable knowledge and insights with the participants this morning. Thank you and have a great day.
Well, thank you, Ronald and Michael, for your words of encouragement and for all your continued support to the World Trade Center here of Greater Philadelphia. So I'm now pleased to introduce our first keynote speaker, Derek Bralton, Vice President and Deputy Chief Economist of TD Bank Group. Derek will provide us with his insights on the 2021 global economic outlook and how to navigate the ongoing uncertainties in today's world. Derek, welcome, and the floor is all yours.
Thank you so much. It's wonderful to be here for this Global Business Conference on behalf of TD Bank, America's most convenient bank. I will, as mentioned, cover some of the broad shifts around the global economic outlook. I have to say, we just recently put out our revised outlook a week ago, so the timing's good for this conference. And the one thing I'm pleased to say is not only did it feature a pretty monumental upgrade, from our last outlook in late last year, but also just more confidence in that outlook. You know, as economists, we tend to worry more about downside risks rather than upside risks. And I have to say that around a brightened baseline outlook for the world economy, we're also more confident that there will be some upside risks that are like a more balanced profile around that. So I think that's the first point to make. The second point, I don't want to give off the impression there aren't a lot of potential headwinds. We're concerned about a number of emerging markets. We're concerned about the pandemic still. I know we've seen tremendous success in vaccine rollouts in many parts of the world, including the US, UK, of course. Canada is beginning to pick up. But emerging markets, within many emerging markets, vaccine rollout is still hasn't even really been started. And so that's one concern that we continue to face. That is still a concern. I think other things, just emerging markets more generally concerned about some of the excesses of government debt, currency devaluation. I'll get to that in a second. But the fact of the matter is that we're more confident, but there still are many issues we continue to monitor. If you can just flip to that first slide, please. So this slide, I think, nicely captures the general outlook for world trade. And I think it has been very well captured so far in the event, that it is very much a changing environment for world trade. This chart, I think, nicely captures, just bringing up, there we go, nicely captures where we stand in terms of the recovery in world trade. We are now back to where we were pre-virus. So after that implosion in world trade through the spring of last year, as many restrictions were implemented, we've since seen a nice bounce back. Now, keep in mind, this is just merchandise trade. This does not include trade and services that really remains extremely weak, with tourism services and many related services, just with the closure of the borders. But goods trade has flowed very, very healthily, and we've now bounced back. Now, you see that trend line, and I think that kind of shows from a longer term perspective where we still stand. Not only are we still dealing with some cyclical challenges, and we're reading more about issues with supply chains. We're reading about shortages of many of the inputs, whether it's petrochemicals. We're dealing with a shortage of many other goods and service and products. So we're seeing that show up in many of the purchasing managers surveys where just delivery timelines are really slowed. So this could be a challenge already starting to weigh on some of the rebound, but we could see that over the next few months really start to halt things as supply continues to catch up. So that's one thing. But I think just some of the broader structural challenges that really since 2014, where trade hit its peak, export trade and merchandise hit its peak, we're in a new paradigm where, certainly the world has been dialed back in terms of globalization. And that paradigm, I think, still exists. Now, it will be interesting in the next few years with a new Biden administration, certainly more in favor of multilateralism, more in favor of, certainly strong relationships with many of its key allies. That could be a big step forward, I think. So we'll wait to see how that plays out. I certainly think with respect to Europe, it could mean lower tariffs on Europe. Canada, I think relations will strengthen. But in terms of China, it still remains the fact we'll be dealing with trade tensions. I don't see a lot of lifting of those tariffs. And if anything, just more of a push to get more countries on side to deal with China more directly. Just flip to the next slide. And I think this is part of the tension story is that, China continues to increase its footprint in the trade, not only in the global economy, but the general trade picture. Obviously, the two are linked at the hips. But China really remains up at its record levels. And in fact, through the pandemic has strengthened its position. A lot of the PPE and security, a lot of the goods in demand have been produced by China. So its position, if anything, has increased. And we do see that as an increasing trend. China now makes up close to 20% of global merchandise trade. And that is a share that's up from about 16%. So its trade is continuing, its importance in the trade market continues to increase. So this is an area that I think certainly is being acknowledged. And I think, if anything, China does face some risks going forward as many of the US and other allies take it on more head-to-head going forward. Next slide. You can just flip to the next slide, please. Yeah, thanks. Now, within, actually go back one, please, appreciate it. Just within the advanced economies, I think Europe is the one softish pocket that we're dealing with. Not only is it now experiencing a third wave, but the related restrictions, there are likely to be more lockdowns. So in the near term, it's going to weigh on Europe. I think what I'm trying to show by these charts is just simply where Europe stands relative to the United States. We use a lot of key benchmarks to gauge it, one of it being purchasing managers indices, both on the goods and the services side. And I think Europe is interesting, where it's really a two-speed economy, almost to the extreme, where the goods production continues to flow and continues to rebound quite quickly alongside the US and a lot of other countries, despite some of these frictions I mentioned in terms of supply chains. It's well in expansion mode, well above 50, whereas services continue to shrink. Anything below 50 points to contraction, whereas the US, even on the service side, is seeing good growth. So that's one thing, is that Europe is still experiencing a lot of weakness. I think one of the challenges Europe has faced is just the fact you've had, around 30 countries really trying to get its strategy together with respect to vaccine rollout. It's been very disappointing, very slow. You've got other frictions. You've got a very strong euro that's weighed on the recovery. And then you've had Brexit and some of the adjustments that's involved in terms of the delinking of those economies. So that's one area that within the advanced world will lag behind in the coming year. We won't see as much growth with respect to the advanced economies overall. And that takes me to the next slide. If you can just flip ahead. That the advanced economies, we're going to see brush improvements across the world, whether you split it via advanced economies, emerging market economies. I think what becomes more important is some of the distinctions across those areas. And the emerging markets, this flatters emerging market rebound. That's the middle set of bars for 2021. You see growth up around 8% rebound in emerging markets. Keep in mind that also includes China, which should grow at around 9% this year. So China is, even though we're seeing some signs of a slowdown in China from its peak rebound late last year, it still will be the major driver of emerging market growth. And then when you hone in on emerging markets, a very different profile, whereas economies within Asia that are very closely tied to China that benefit from some of the supply chain shifting, the Taiwans of the world, they will see very strong growth this year. And then you get to some of the still battered economies in South America, where pandemic is still very problematic, where governments are dealing with excessive fiscal positions, the risk of capital outflows, and we're starting to see that feature more broadly now with U.S. Treasury yields beginning to increase. That's putting pressure on markets that are very closely linked to the U.S. dollar. And that's a real pressure. So I think within the emerging world, you're going to see a strong rebound. A lot of that is China. I think once you strip that away, it's not as strong. And even then, it's very heavily tilted towards the Asian emerging markets. India would be an exception where it's had a very difficult time. Its economy should rebound quite healthily this year, but still as a level, it's still facing a hole relative to where it should be. So I think that's worth pointing out. In terms of advanced economies, I've kind of touched on the broad shifts. I think if I take you to the next slide, we can dig a little bit more into the picture. Oh yeah, just before I get there, one thing on China, I've already hinted that, China is going to be an interesting economy this year. We forecast growth of close to 9%. And that it was one of the few economies to expand in 2020. So it's rebounding 9% off about 2% growth last year, which was very different when we saw broad-based contractions around the world due to the pandemic. You can see that some of the recent indicators do show a tapering off in the pace of growth. And you've got a Chinese government there that not only will be dealing with some of the challenges, around the world as countries take it on in terms of some of its trade practices and intellectual property and the like in high tech, but also, it's dealing with some internal concerns around excessive debt, too much froth in terms of credit. And the government there is now beginning to tighten up some of its financial conditions to address that. Its target, by the way, for growth is closer to 6%. So we do have an outperformance. I wouldn't put too much stock in their target. They tend to exceed their targets. But all that to say that, we have built in a modest drag from tightened financial conditions, but it could be deeper if the government decides it's going to tighten up on bank lending and the like with the state-owned banks. And with shadow banking more broadly, that could weigh on the economy more broadly. And we're starting to see some signs of slowdown. So that's a risk, I think, that we're going to be monitoring. But all that to say that I think just the rebound in the world will support China's recovery in the year ahead. So that's what we're putting quite a bit of emphasis on in our baseline outlook. Next slide. Yeah, I think, this is obviously key here. And I have to say that one of the themes being adaptability, and one of the, as a forecaster, we've swung too much from being overly optimistic when we had the first impact of the virus earlier last year in the spring. We had a very strong V-shaped rebound. That proved to be far too optimistic as the pandemic proved, much more dangerous than we had initially thought. Then we were far too pessimistic. And I think we're now landing somewhere in the middle where we have a V-shaped recovery, not a pure V recovery, but a V-shaped recovery overall in the world. So it is better. And I think one of the things that, I point to is just adaptability of the economies that, in Europe, you're getting third wave lockdown restrictions given the upwave in the virus. But I don't anticipate it's going to have a very detrimental effect. It will slow things down. Same thing for Canada. and some other economies. But adaptability has been key. But the vaccine, I think, is being a real source of confidence that some of the efficacy results we're seeing out of Israel, out of the UK, really does show improvement. We're going to very soon see it show up in the United States and other countries, and rollout is accelerating. So I'm confident. You can see here a bit of a ranking of which countries have led the way in terms of vaccine rollout. The US is now up to about 1 in 4 adults, at least with one shot. So getting there, and I think by May we'll be there. In Canada, it's probably going to be more like June. UK is further ahead, lagging behind in Europe and the like. But this is a really positive thing, I think. And we still worry about mutations, and that could be a risk. But so far, so good, I think. And hopefully this will continue to increase confidence in the world outlook going forward. Next slide. Yeah, so, I think the other thing that is the US stimulus, and a rising tide does lift all boats, that there's a bit of a free rider thing going on here, where the US, as we know, is injecting a lot of fiscal stimulus into its economy. And this is going to ripple around through to many of its trading partners. And this is a factor we built into our global outlook, the spillover. You can see how Canada benefits, despite some of the early executive orders by Biden around Keystone and the like. The fact of the matter is the economies are very tightly intertwined still. Canada gets a big lift from US strength in terms of trade benefits. And that would be two-way trade to a large extent. And then it goes down the pipe. We've augmented growth around the world to reflect some of the stimulus benefits on a US economy that will ripple through. And the US will be leading the way this year. If you just flip to the next slide. Now, again, you got to be a little bit careful about growth. I like to show some of my charts now in levels versus growth, because it presents a little bit of a deceiving picture. Now, 6%, if there's a number you're going to remember from this, that would be the growth outlook for the world, for the US and Canada in the year ahead. And that's been dramatically bumped up from earlier rounds where we thought it was going to be more in the 4 to 5% range. So strong rebounds, the US and Canada both at around 6%. But keep in mind that the US wasn't hit nearly as hard last year. So the US will very easily move past its pre-virus levels a lot quicker than Canada, a lot quicker than Mexico. This shows you the kind of the NAFTA countries, if I can refer to that. But nonetheless, still solid prospects for Canada this year. Commodity prices have improved. We've upgraded our commodity price outlook for oil and a lot of the commodities Canada produces. And investment activity is beginning to flow back. You've got consumer spending, a lot of government supports, and probably more support in the upcoming Canada federal budget. A similar picture to the US, where the fiscal supports are certainly helping to not only limit some of the downside in areas like small business that have been hit so hard in a lot of the high-touch industries, but just continued support that should see them through at the expense of higher debt longer term. But this is certainly supportive of the Canadian outlook as well. Now, Mexico is weaker. Mexico had a harder hit last year. We expect a weaker rebound this year. It is still going to rebound. Now, Mexico, like many emerging markets in Central and South America, just dealing with a deeper pandemic. And some of that is just, going to continue to, impact confidence and spending. They didn't implement a lot of fiscal stimulus. Part of it is emerging markets their hands have been tied by heavy debt, concerns about capital outflows, and just reliance on foreign investors to fund deficits. So it hasn't had the fiscal response, partly because its hands have been tied. It's been relying on interest rate cuts, but there's only so much that instrument has done to spur growth. So we're a little bit less optimistic on Mexico. But still, the direction is broadly similar, and we expect to see growth continue into 2022. Next slide. So getting closer to the end, supply side bottlenecks. This is something that it's all higher on our radar. It's impacting industries across the world, and just given the linkages of supply chains. The auto sector in North America has been kind of the poster child of experiencing challenges with some of its key inputs, whether it be, chemicals and the like. It's been a real challenge, and this is likely to be a near-term challenge. You are seeing production impacts already on both sides of the Canada-US border and into Mexico as a result. So I would say that this is something that's high up on our radar screen. This just emphasizes it. And you will get continued supply chain shifts. I think, this is one of the legacies of the pandemic and adopting. So some of this is cyclical, and I think it will abate as supply begins to catch up. Some of it will be longer lasting because of the pandemic in terms of driving shifts in supply chains, dealing with some of the weaknesses and some of the security, PPE and the like. Economies, including Canada, where I sit right now, a lot of thinking about how an economy such as ours can look to shift and to reduce the risks, because if we've already talked about, this is something that could happen on a whim, where all of a sudden supply chains could be impacted by an unanticipated event. Next slide. Yeah, just a few, just to wrap it up. I think one of the trends we're seeing this year that I think is a sign of, it's a good news story, that yields are off their emergency lows. We're seeing broad increases in longer term borrowing rates. It's beginning to ripple through into some of countries' retail borrowing, business borrowing at the longer term. Short-term rates are pretty much at zero. And I think the message we're getting from central banks and across economies is that's not going to change anytime soon. Emerging markets are different. They may have to raise their short-term rates to try and protect their capital, to try and discourage capital outflows by increasing the return of investing. So rates in Turkey and some of these other countries, Brazil, are actually going up. But among the major advanced economies, the US, Canada, no change in short-term rates. You are seeing a pricing in of inflation into longer term rates, as you see in front of you. We have seen quite a shift there. And I think we've pretty much seen the adjustment. I don't see a lot of potential further upside in the near term as central banks prevent a lot of further increase. So I think what you see there is pretty much where we see it going forward through the rest of this year. The big risk around this would be if inflation overshoots forecasts, and that is a risk. You get a lot of fiscal stimulus at a time where the economy is already recovering from the pandemic. Some of the, there will be price increases as some of the supplier pressures because of a lack of supply ripple through prices and some of the costs, and that could make its way to retail. But I think the general thinking of economists is inflation, even if it overshoots in the very near term, is still going to remain well contained. There isn't enough to jeopardize that story. But I would say if there's a risk, it would be for higher inflation, which could mean higher yields. And I think we need to be prepared. But from what I see here, this is good. This is confidence in the bond market that we are in recovery mode, which I think is a good news story. Next chart. We got two left, and then hopefully we got a little time for questions. Government debt, this is a longer legacy that will be with us for quite some time. The world is going to be awash in not only government debt, a lot of corporate debt, in some countries excessive household debt, but the government is getting a lot of the focus because it's pretty much been backstopping recoveries through a lot of borrowing. And it really has been across the board. Debt to GDP has been going up. All I can tell you with this is it's not an issue now. Markets are very happily buying government debt to support governments as they support their economies through the rest of the crisis. These deficits will have staying power. They're not going to fall off in the very short run. Longer term, the risk is higher taxes. And in some countries, they're going to have to implement spending cuts to continue to attract investors that may get more worried, particularly if credit ratings are downgraded. The US, I think, will probably see taxes rise sooner than later, particularly as the government is looking at another wave of stimulus on the infrastructure side in particular that may come tied with it some tax increases. That could set in place some trends in other countries, including Canada, maybe with a bit of a lag. And last slide, just on the US dollar. I know there's been talk about a stronger US dollar lately, but you can see where we stand. It is quite a bit weaker than it was at its peak pre-pandemic. So it has trended up. It's still lower. I think this is an opportunity for US exporters where, against the vis-a-vis the euro in particular, still some opportunities and across the world. So we would anticipate a little bit of a further strengthening of the dollar, but still remaining well below its pre-virus levels. So that's it from me. Generally, I'm optimistic about where we're headed, much more than I was, but certainly be monitoring some of the usual risks. So I'll pass it back to Robin.
Yeah, Derek, thank you so much. Great presentation and very insightful. We will now have it open for Q&A. We do have a few minutes left, so please put your questions in the chat. But here's already first question. Derek, do you have any concerns about the current levels of corporate debt in the United States, or potentially sort of delayed wave of commercial and retail bankruptcies?
I do. I still have concerns about that, albeit less concern. I think what growth does is it does mitigate some of these risks, but clearly under the surface, the impact of the pandemic is still there. And I think in particular for a lot of small businesses, you're seeing shifts in spending patterns that may not return very quickly. So despite a lot of the charts I've shown you focus on the headline growth and the like, I think it's important to realize that due to the pandemic, we talk about K. The K is probably the letter to remember because, for as many industries that are thriving right now, you still have many that are really struggling. And we see it's going to take some time for that K to kind of narrow where, the upside and the downside kind of converge a bit. So I am very worried. I'm worried about debt generally. I think we're now, a lot of the measures taken during the pandemic incurred extra borrowing. Some of it was grants, providing grants and obviously, income to households and the like. But for businesses, the idea was here, we'll give you lending facilities, support and the like. So a lot of companies are going to come out of this pandemic very heavily indebted. It's a global story. It's not just in the US. I see it everywhere in Canada, other emerging markets, Europe. And all I can tell you, there's a real reliance on low rates. So if rates come up quickly, that's a risk. And that's something central banks will be doing their utmost to prevent those longer term yields globally from rising too much to mitigate that. So that is one of the risks that I think is right there high on the radar screen.
Great. Well, thank you. So maybe in closing briefly, you mentioned the K word, the word debt came up. Just maybe to briefly go back to the C and the I words, like how do you see the position really of the US dollar as the world's reserve currency, especially in the context of possible rising inflation?
I'm not too concerned. We'll see. There is concerns that it's be a bit of an experiment here because I think a lot of forecasters put a lot of emphasis on where we've been in the last 10 years, that despite the Federal Reserve engaged in a lot of money printing and the like, we didn't see inflation. And a lot of that gets chalked up to general global shifts towards digitization. A lot of these, more, e-commerce that hold down prices. And I think we're putting a lot of stock on that remaining. So our upside risks on inflation are quite moderate at this stage, but we'll see. That may get tested. I wouldn't put a huge probability on it. I feel fairly confident in my view that the upside is limited. So based on that, I don't see any real risk of the US dollar encountering massive depreciation, particularly from these relatively low levels that we're at right now. I showed the chart showing that, it's already come down quite a bit. So I'm not too concerned. And I'm not too concerned about its status as the reserve currency. There's a lot of talk about Bitcoin and cryptocurrencies. That's a longer term story, I think. And that'll be interesting to see how that shapes out. But no, I see the US dollar remaining quite firm.
Well, thank you, Derek. There's so much more to talk about, but our time is up for this session. So thank you again for sharing so generously here with us. And thank you also to the audience for your questions. I'm now handing the baton over to Linda.
Thank you very much, Robin. As many people in our audience know, just prior to coming to the World Trade Center, I was a member of the board and vice chair at the Export-Import Bank of the United States. So I am particularly pleased and honored to welcome Judith Pryor, who serves as a member of the board of directors at EXIM Bank. And the World Trade Center is very proud to be a local partner, a regional export promotion partner for EXIM Bank. We have been for many, many years, and we've worked closely with EXIM's regional deputy director, Regina Gordon, in presenting export finance seminars in the region. Director Pryor, I I should say, very well prepared for XM. You brought over 25 years of international business experience with a concentration on the broadcast and satellite communications industries. You also know quite a bit about international development finance, having served at OPIC, which is now the U.S. International Development Finance Corporation. So if I were to look at your career, it certainly is a career dedicated to helping companies, large and small, succeed in markets around the world. So Director Pryor, tell our audience, what is really XM's role here? Can you tell us more specifically how XM helps companies?
Of course. First, Linda, thank you so much for having me today. It's such a pleasure to participate in today's event and chat with you, Linda, especially given your deep understanding of the Export-Import Bank of the United States, as we fondly call XM, and how to help support American workers and exporters. So XM, as you know, is a small independent federal agency with a very simple mission: to support U.S. jobs by facilitating exports. It's really that simple. We're a very important tool in the government's trade toolbox as the official export credit agency of the United States. And we achieve our mission and support your companies in Philly and throughout the United States by providing direct loans, loan guarantees, including working capital, supply chain, medium and long-term financing, as well as export credit insurance. So for the folks watching today in our audience that are unfamiliar with XM, I thought maybe we could share a quick video, short video. It'll provide a nice little snapshot of what we offer. So could we roll the video now, please?
If you were given a box and it contained all the tools needed to make your business successful, wouldn't you open it? At XM Bank, we provide those tools because we know that behind every great product, there's a team of people committed to delivering quality and craftsmanship. Our export credit insurance protects your exports against risk, so your inventory can reach the global marketplace and those who need it most. When private sector lenders are unable or unwilling to provide financing, XM's working capital loan guarantee gives you the freedom to grow and make new connections. And for XM, no company or transaction is too small. With XM, you can ensure your receivables generated by export sales access pre-export working capital and offer loan terms to foreign buyers for capital equipment. We can give you the box to make your business competitive. You just need to open it.
Judith, looking at that video, it looks like XM supports a lot of small businesses. I think people will be surprised at that. When folks think of XM Bank, over the course of its 87-year history, the bank has financed large infrastructure projects like the Pan American Highway, the Burma Road, post-World War II reconstruction, to name a few, as well as sales of large aircraft and agricultural equipment. But the fact remains, and this surprised me when I first went to XM Bank too, that the majority of transactions are for small businesses. Well, can you expand upon what you said earlier? How does XM provide assistance to small businesses, and especially during this time, during the pandemic?
Yeah, sure. Linda, especially as you've just indicated and as we've just seen on this short video, we provide financing to businesses of all sizes, but we do have a specific focus on small business. In fact, in your region alone, 75% over the last 5 years, 75% of XM's customers in Pennsylvania were small businesses. That number jumps to 81% when we talk about New Jersey. So a couple of things that are important to note. We don't compete with the private sector. We like to fill in the gaps where they cannot or will not provide financing. And it could be due to sector limitations, risky markets, and now, of course, liquidity issues due to COVID-19. So I want your audience to think of us as a complement to the private sector. In fact, most of our transactions are actually done in conjunction with private sector lenders, either through loan guarantees or through delegated authority. Delegated authority allows certain trusted financial institutions like TD Bank, who actually has maintained a bank letter of credit with XM since 1995. And they've worked with us for a solid 20 years on our working cap guarantee program. So they are a trusted delegated authority partner. Another example, of course, is the World Trade Center of Greater Philadelphia. You really help get the word out, and you're a great place for all the industries and all the folks watching today to start when they're looking to XM to help them assist with their XM-backed financing. It's an efficient way to start that. So our export cap, our exposure cap, excuse me, is 135 billion. So hearkening back to what you said earlier about some of the giant infrastructure projects that we support, we do continue to support those. But one might think, as you suggested, that it's really just large transaction, but it's just not true. Yes, we support Boeing aircraft sales, but think of the tens of thousands of small businesses that feed into their supply chain. And yes, XM also supports a vast array of industries, both large and small, everything from an industry I'm very familiar with, the satellite industry, to microbrewery canning equipment, and even custom looms. But the bottom line is XM is here to reduce the risk of exporting and to ensure that American-made goods and services have a level playing field to access foreign markets. And we really do focus much of our energy on helping small businesses. I might give an example. This is one of my favorites. Multifruit USA. So this is a small business in Haddon Heights, New Jersey. And they export produce globally and had foreign receivables collection problems with several of their international clients. So they wanted to expand into new markets, but they were concerned about the risk of non-payment by new international customers. Export credit insurance provided by XM helps protect Multifruit's foreign receivables from non-payment. And it also allows the company to offer open account credit terms to new buyers. The other thing that Multifruit has been able to do is expand into new markets with confidence. And XM has supported over $200,000 in Multifruit USA's exports. Now, just quickly, Linda, you mentioned COVID, and businesses, particularly small businesses, are struggling a little bit right now. There are a few things that XM has done over the past year, just immediately, beginning in March of last year to help. COVID has just made things even a little bit worse. So what we've done is that we've made changes to address the global financial crisis in order to help exporters and lenders. Simple things, we'll talk about those in just a second, but for your audience who is not as familiar with the international market or might be exporting for the first time, let's talk about why it's so important for small businesses to export. First, 95% of the world's consumers live outside of US borders. And US companies who export tend to grow faster and are less likely to go out of business than those who don't export. And last, exporting companies tend to be more profitable. So there's obviously tremendous value in exporting. I'm sure you would agree, Linda. And no company is too small, as you've heard through our video here today. We really are here to help take the risk out of financing so that you can focus on exporting with confidence, regardless of size, regardless of sector, regardless of region of the world in which you choose to export, and whether it's short-term export credit insurance or longer-term financing. In fact, last year, a stellar year for small business with XM. 90% of our transactions were with small businesses. So quickly related to COVID, at the outset, we knew that there would be pain, and we knew that businesses were going to need our help, and lenders as well. So first, we took swift action to ease the burdens that are associated with our short-term financing tools. Our waivers, deadline extensions were provided. We streamlined our processing, and we moved to online applications. And second, we looked at our existing portfolio, as any great financial institution must do, and we needed to closely monitor and perhaps restructure certain transactions. Defaults are in no one's best interests. And then third, while we usually look to international buyers for much of the business that we do here, we were much busier here with our working cap guarantee program and our supply chain financing. And we wanted to make sure that we were supporting lenders and exports through these programs. They're both tools that will help provide and improve pre-export liquidity. And we were able to take the decision, the board took the decision to increase our guarantee to 95%, up from 90%. We also talked a little bit about other tools that we use, including delegated authority. And sometimes it's good to give examples of how that works. And if I might just take one more minute, I have two quick examples. Every Pennsylvanian, I'm sure, is very familiar with US Steel. They were actually a first-time XM customer, and they needed liquidity to pay to pay their supply chain now, not when they sold their final product. So they used our supply chain finance guarantee program. Ember Air Executive Jets is also a first-time XM customer, and they have their finished product at their manufacturing plant in Florida, and it's ready for delivery. But the way that they're set up is they get paid at the point of delivery. Only with COVID travel restrictions, none of their buyers were coming to the US to pick up those aircraft. So XM's working capital allowed them to continue production during the pandemic. So Linda, you can see the benefits of XM financing. They really do trickle down to supply chain companies and the small business community, and it goes way beyond the primary exporter. Again, our objective during this past year was to provide added relief to US suppliers and exporters, and to encourage financial institutions to continue to finance exports by reducing the credit risk to their institutions. And I'll stop there and hope that was a good explanation of our products and services.
Well, Director Pryor, I think you've opened a lot of eyes in terms of the assistance to small business. And what we want to do at the World Trade Center of Greater Philadelphia is to offer our companies practical solutions. The majority of companies that we help are small businesses. And so I always say that financing exports may not be the first thing that our companies, that exporters think of, but it may be the most important thing in not only making that sale, but also ensuring that you get paid. And the insurance program is very reasonable. It's pennies on the dollar in terms of premium. So that I always say, so that our exporters can put their heads on that pillow, on their pillows at night, and have the confidence that they are going to get paid for that sale. Whether hopefully it is through the buyer, but also if not through the insurance program. And once receivables are insured, it makes it that much easier to go to the bank and get working capital support, certainly. Well, it's all about making sure our companies remain competitive globally. What does the competitive landscape look like? Other countries certainly support their exporters. In fact, I have seen a statistic in terms of competition. Let me make sure I get this correctly, that export credit agencies from the period of time 2000 that among export credit agencies from the period of 2015 to 2019, the total amount of medium and long-term financing provided by China's export credit agency was equal to 90% of the financing provided by all of the G7 countries. And we've already heard from Derek the percentage of global trade that now China accounts for. How is XM working to ensure that American exports can compete on a level playing field?
You know, Linda, that's a great question, and I'm glad our colleague from TD Bank talked a little bit about the China market, although his approach was a little bit different than what you're addressing and I'm about to talk about now. You know, through our last reauthorization, the 2019 reauthorization, which is the action that Congress takes in order to keep the Export-Import Bank up and running, and a 7-year reauthorization at that, which is very long-term for our friends in Congress. So we're thrilled to have 7 years, which should provide assurance to all of you out there that we're around for the long run and here to support you. But as part of that reauthorization, it created a program on China and transformational exports. Now, what it's designed to do is it's designed for XM to be able to offer financing that's competitive with China and or that advances American leadership across 10 sectors. Sectors including wireless communications like 5G, renewable energy, energy efficiency and energy storage, a sector that I run point on for the board, water treatment and sanitation, quantum computing, and a few others. But the program's now just getting its sea legs, but it does provide important opportunities for XM to offer competitive financing and to support critical industries. As you mentioned, Linda, those numbers, official and unofficial numbers for the past 4 years, you know, exceeded what the G7 countries had done in the same time frame. But they're not the only ones that are competing with the United States and our exports. We are definitely not alone. In fact, 4 years ago, using that time frame, 85 ECAs existed around the world, export credit agencies. Today, that number is 115. Foreign export credit agencies are increasingly proactive. They're being innovative, flexible. They want to support their national business, their exporters, through products and financing and policies and programs offered. So they're really getting creative. And Congress did XM, by extension, American workers and American goods and services, a great service with our 7-year reauthorization, as I mentioned. It provides, and it really should provide, certainty to exporters, foreign buyers, financial institutions that we're not going anywhere. And we really are here to support you. It is a large marketplace. 95% of consumers live outside of our borders. XM is here to help you take advantage of those growth markets and the opportunities that exist beyond our borders. So with partners like the World Trade Center, Linda, who's more knowledgeable than I am, she's such a great advocate for all of the businesses in Philadelphia and the greater Philly region. With partners like TD Bank and others, PNC Bank and others, we're all in this together, and we really are designed and here to help you succeed so that you can compete effectively and on a level playing field all around the world.
Thank you, Director Pryor. You know, earlier, I shared with everyone that we are going to be launching a new program that is not only dedicated to restoring growth for small businesses that have been impacted by the pandemic and leading sectors for our region's economy, but also a program to help minority and women-owned businesses. Can you share with our audience how XM helps minority and women-owned businesses specifically?
Certainly. I would just say that through language in our charter, which is the law that governs us, we have certain niche programs that have been called out specifically where Congress has directed us to focus our energy and attention. That's minority and women-owned businesses. It's increasing exports to sub-Saharan Africa. Environmentally beneficial exports, including renewable energy. And then, of course, the China Transformational Exports Program that we just talked about. But Africa and environmentally beneficial exports are my focus. So I'd really, really like to see us do more here. I would say that while we don't have any specific programs that are dedicated, our marketing efforts are designed to reach and help minority and women-owned businesses and to really get the word out to all small businesses that we're here to help, that no transaction is too small. If we talk about Africa for just a minute, a place where I have worked for many, many, many years in a number of countries on the continent, I'd really like to see us do more here. And for whatever reason, U.S. exporters don't think of Africa when they export, but they have 7 of 10 of the largest growth markets experiencing double-digit growth. You know, COVID aside, right? When we get back to normal, this truly is an opportunity for U.S. industry. You know, we have a long history of working with countries in Africa, from the Clinton administration and the AGOA program to the Bush administration and PEPFAR, which mostly benefited African nations. During the Obama administration, the emphasis was on power and the Power Africa program, which was to provide 60,000 megawatts and thousands of new connections across the continent. And that program is still ongoing with a focus on distribution now. And then during the Trump administration, Prosper Africa took place, and that's still ongoing. And that is increasing two-way trade and investment with a whole of government approach. So all these initiatives enable a whole of government approach, but particularly Prosper Africa. The point is to ensure that American companies can gain footholds in foreign markets. You know, I mentioned this earlier, XM, though a small agency, is a big player in the US government's trade toolbox. And Linda, if you don't mind, may I take a moment to talk about one of my favorite projects on the continent, the Well de Lamont transaction?
Yes, please.
Okay, it's not in your region. It's actually a small Chicago area business. And they have successfully used XM financing some years back, before I got there, to complete a rural electrification project in Ghana. Well, Senegal, a neighbor to Ghana, wanted to undertake a similar effort. And so the US government, XM, TDA, the embassy, the Department of Commerce, the State Department, it was all hands on deck, right? They all chipped in to support this Well de Lamont transaction and make it a success for Senegal. So XM financed the deal. Our financing is what helped seal the deal, if you will. And what we provided was over $100 million for expanding distribution grids. The project will support distribution grid expansion to about 400 villages, including solar microgrids to a handful of even rural villages. So this truly couldn't have been done without government support writ large. And I think it's important for your audience to know that we are here to help, and it's not just XM, but we actually do work across all of government to get things done.
That's a terrific example. You know, Africa is very important to the region. A tremendous amount of trade flows through the port of Philadelphia, including cocoa beans. And I know there's a great interest to expand commercial ties with Africa. And I always feel that U.S. companies and companies in our region absolutely make the best products, have the best services. At the same time that they're providing these products and services, they're helping the developing world have access to amazing technologies and services as well. The coined expression, doing well, but also doing good at the same time. I know we need to go to Robin and some questions from the audience, but before I do that, what are the 3 things that you want people to walk away with, the audience to walk away with from in your message this morning?
Oh, 3, huh? Okay. I've said it enough, but XM is here to support you, and we are here to help reduce the risk of exporting, which basically will help weatherproof your company. We have an appetite for risk and the balance sheet to support it. We're at about 50 billion right now, but our ceiling is 135. So there's plenty of room to grow. And we truly support all sectors. We truly are agnostic. We want to help you, our experienced and talented staff, led in this region by Regina Gordon. So I know she's somewhere in the audience today. And then with partners like the World Trade Center of Greater Philly and TD Bank and others, you know, there's really, those are, I know that's not 3, Linda, but, you know, take advantage of the 95% of consumers that are living outside of the United States. Let us help you de-risk your transaction so you can, as Linda said, put your head on your pillow at night and have a good night's sleep knowing that we got your back.
Absolutely. Well said. And we look forward to helping more of our businesses see how they can use XM supported financing. And now I think we're going to turn it back over to Robin with any questions, follow-on questions from our audience.
Yeah, well, thank you. What a great conversation, Director Pryor and Linda. And I have to add that I had a first-hand experience previously in my finance days working with Exim Bank on a great number of transactions, and that was always just a great pleasure. And I firsthand witnessed how much this always supported the businesses that we worked with. So we have it open.
Glad to hear it, Robin.
Yeah, no, it was also aircraft related. So, so the floor is open for questions. Please put your questions in the chat. Take advantage of having Director Pryor here with us today. There's some questions coming in. One thing also, you mentioned Prosper Africa and sort of the pivot the initiatives that the US government is undertaking related to Africa. This is also a priority area for us as World Trade Centers Association, where we have many new members and licensees joining us in Africa, expanding that network there as well. So I'm very glad to see that there's so much capacity here to work with Africa as well.
Yeah, so that's good. We're actually open in 48 of 54 African countries, including 44 of them in sub-Saharan Africa. So I do hope that more and more folks continue exporting and looking to markets on the African continent.
Absolutely. So a question that came in from the audience, more related to our immediate neighbors. Can you speak a little bit to opportunities and any programs related to countries in Latin America?
So we actually have, let me see if I can get some numbers here. I mentioned we have about 47 billion or so on our books today, but we have a pretty robust pipeline as well. And, that's about 3 billion in our pipeline in the Latin America, which we pair with the Caribbean there. It's a strong part of our portfolio. I would say if you look at the pie that is XM's portfolio by region, we're fairly well diversified. But I will say that opportunities that you hear of we want you to come to us, right? We want to be there to support you and help you. We are truly agnostic. I mean that when I say it. There are very few exceptions to what we will support by way of sector. We're open in most regions throughout Latin America, most countries throughout Latin America. So it's less about what opportunities are available, and it's more about, I would turn that back on you to say, how can we help you as you want to expand into Latin America?
Yeah. But that's great. So our time is almost up, but just one follow-up question, really coming off of all the good things you were just talking about. There's companies out there that want to work with Exim. How do they get started? Who do they call?
You know, that's a great question. And who should they call? Well, there are a number of places they can start. They can start with their bank to see if they're one of XM's partners. But you know, being in this region, if you're participating in this call, you're already very familiar with the World Trade Center of Greater Philadelphia. You have Linda Conlon running the operation, and she is a, you know, once an XM Bank employee, always an XM Bank employee. So I know she's a big fan of XM, and she can answer your questions, as can her team. And then, of course, we have Regina Gordon. You know, XM has a number of regional offices. We are a small agency, mind you, but we do recognize that it's important to have people in the field. And Regina Gordon is our point person for this part of the country. I'm sure you can get my information through the World Trade Center or Regina's information, but I would suggest that you start with the World Trade Center, because they'll really know, is it XM? Is it some other organization or agency within the government that can be most helpful to you? Because we all want to be helpful, and there are a number of different agencies that can provide support to your organization. So I would suggest starting with the World Trade Center, but know that we have dedicated staff in your region that are here to really help you succeed.
Well, let me second that suggestion to start with the World Trade Center in Greater Philadelphia. Well, thank you again so much, Director Pryor, and of course, Linda, for such an engaging dialogue. It's now my pleasure to introduce our next two keynote speakers, Osagi Imasugi and Dr. Stephen Tang, who will have a fireside chat on the strange new world that we live in today, surviving and thriving in a post-pandemic life science world. Mr. Imasugi is a great entrepreneur and also the co-founder and senior managing partner of PIPV Capital, a private equity firm that focuses on the life sciences vertical. Now, Dr. Tang serves as president and CEO of OraSure Technologies, a leader in point-of-care diagnostic tests, specimen collection devices, and microbiome laboratory and analytical services. Gentlemen, let's jump right in. Welcome. And how have your organizations pivoted to adapt to COVID-19, and what lessons can companies in the region learn from your experiences to help them thrive in a post-pandemic world? And I would add, is there going to be such a thing as a post-pandemic world? Dr. Tang, let us start with you.
Robin, it's wonderful to be here. So thank you. Thank Linda for the opportunity to be with you today, and especially with my dear friend, Osagi, who's been a mentor to me for many years. Osagi, one of my proudest, happiest moments was inducting you into the Innovators Walk of Fame at the Science Center a few years back. So it's a pleasure for me to be here. So to answer your question, Robin, this is the topic of the day, which is when, if ever, will we reach herd immunity as a planet? So much focus has been put on the United States and what we're doing here in terms of vaccination, but we are the exception, not the rule. And it's very likely that we will not reach herd immunity as a planet for several years. And so aspects of safety and wellness that we abide by today will be with us for a while. I think the leading indicator on return to normalcy will be when will we return to global travel and feel safe traveling unrestricted to any country that we want to. We're a little far away from that right now. So the life science industry will have a lot to say about this. Obviously, the vaccines will play a big role. testing will continue to play a big role. The work that OraSure does in self-testing, point-of-care testing is going to be very important also. But I think it's been remarkable that innovation has been accelerated over this period of time as well. And we can certainly dive into that topic. But I think the life science industry has really felt a call to arms since this pandemic began, and is working very hard to create new products that address different aspects of the healthcare challenges, everything from testing, treatment, vaccines, but also all the way to telemedicine and elsewhere. And I know Osagi has a large portfolio of opportunities in his investment fund and his other commercial interests that he can talk about there. But I would say the life science industry is up to the challenge right now. And we're doing everything we can individually and collectively as companies to make sure it happens.
I would agree with everything that my dear friend has said. We've been together for quite a while, so it's great to share the panel with him. Look, necessity is the mother of invention, right? And what has happened here is that this crisis, this pandemic, this global crisis, and we cannot overemphasize the global nature of this. And you know, Steve said it, others have said it, but the reason we call it a pandemic is that it's global. And the reason, to Steve's point about we have to get to a herd immunity on a global basis, let's be clear. If we don't do that, then there will be reservoirs of the virus that still exist on a global basis. And with international travel nowadays, within 24 hours, a virus can go around the globe. So that's why we have to do it on an international, on a global basis. Otherwise, if we don't clean out those pockets of the reservoir, it's going to be a problem for us. So what has happened within our industry? We have innovated because it's the mother of inventions here. It has emphasized the ability for us to work remotely. We had already done a fair amount of that movement, but this crisis made it even clearer. We have optimized the way we could do that, which is absolutely crucial. So all that is good. But what it has also done is that it has shown fundamental structural inequalities. So here we are right now having this conference using a Zoom platform. But that presumes you have electricity, you have high-speed internet, you have a computer, or you have a phone that is a smartphone that has a camera and so on and so forth. We've taken for granted that everyone has that. The reality is that's not the case. So what this period has done, as I said, a lot of good things in terms of innovation and us having to move quickly and all that, but it's also emphasized the structural inequalities. And I just want to make it clear, those structural inequalities hurts all of us. It's not a nice thing to do, it's a smart thing to do, because we need to be able to harness the totality of the human mind and all the people that we have that can contribute to that. So I think it's been a very interesting period. We're still in it, we're not done yet, but it's given us both the creativity and it has emphasized the challenges that we're gonna have to manage through.
Yeah, I would just pick up on a couple points that Osagi made. This crisis, this pandemic, has had a great leveling effect across the world. So the United States, with the most sophisticated healthcare system in the world, or certainly the most expensive, right, has nearly been brought to its knees by this pandemic. And that's because a lot of our infrastructure has relied on access to hospitals, to physicians, to in-person gatherings, which were largely unavailable during this overall pandemic. So it's been eye-opening. It's been unsettling in many ways. But one of the things that I can speak to is OraSure Technologies is the leading provider of saliva-based self-tests for HIV in the world. And most of our customers, to pick up from the last session, for these HIV self-tests are in sub-Saharan Africa. There are a couple reasons for that. HIV as a plague has been ravaging Africa for some time. And one of the reasons it has done so is there's a reluctance to get testing because of the stigma associated with HIV. In other words, if you are a young male in a country in sub-Saharan Africa, the stigma against being associated with HIV is so strong that you will not stand in line at a clinic to be tested because the mere presence of you standing there waiting in line to be tested presumes that you have HIV. So that just perpetuates the disease. And so therefore, the only way out of that is to be able to be tested in the privacy of your own home, to be able to determine whether you have the disease, to be able to have a public health worker there to get you into treatment that you are. That's how you break the cycle of the disease. So there are some similarities to where we are with COVID-19, of course, which is if you don't know that you have it, you're likely to infect others. And off we go into this cycle of virulence and variants and further mutations in the genome of the virus that reinfect us all. So that experience, I think, has been brought back to the sophisticated economies like the US because people are staying at home. They don't want to gather for testing. It's inconvenient to gather for testing. And so that's a level of innovation that I think has been underappreciated, which is it's not just the sophistication of the technology, it's the ease of use and the customer experience as well. So there's a lot to the innovation aspects that Osagi mentioned that I think are very relevant today.
The other thing that I think it's important that we keep in mind, because this is a conference talking about the global economy, is the supply chain issue. You know, for those of us in the private sector, we really have to start thinking in a slightly more strategic manner. And this is where our interface with the government becomes very important. There were quite a number of companies based in the States that for an extra percentage point or 2 or 3 percentage points, decided to outsource their supply chain to what they perceived as lower cost basis on a global basis. The problem is that what this crisis showed was that we had outsourced so much of our supply chain and we had done enough of just-in-time supply in terms of inventory that when a crisis occurred and there was a significant demand for products, we couldn't meet that demand. And we were at the mercy of those to whom we had outsourced our supply chain to. And this has been an issue that we've been discussing within our shop for quite a while. And it's about strategic thinking, right? I mean, is the extra 2 or 3 points, is it worth the possibility of exposure of what has just happened? And I think we need to have a frank debate about that. And are there ways that we can work with our government to make sure that we at least retain in the US, with US workers, a certain portion of our supply chain so that if we're ever faced with a crisis of this nature, we can move very quickly. I just don't think I don't think it's right for us to think about this purely as a financial, economic, I want to get a few more margins. I really do think we need to start thinking strategically, and this has made it very clear. We've done that within our shop and within our portfolio companies, and I will urge people to start really thinking about this. And there are already some initiatives from the Biden administration to try to focus on supply chain. And my hope is that those initiatives lead to structural change, long-term structural change to encourage the private sector to protect our supply chain better than what we have done, as has been shown with this crisis.
I absolutely agree with Osagi. The political side of this, which of course leads to policy on a national basis for us, and then links to cooperation across the globe, is vitally important. Unfortunately, I think what the pandemic is demonstrated is that it's difficult to get policy in place to address long-term needs. I think it was William Schlesinger, the first Secretary of Energy, said that there's only two types of energy policy back in the 70s. That's complacency and panic, right? And so we've been through the panic phase right now. And I think my biggest fear is that we will then re-enter the area of complacency. And that's precisely what will lead to the next pandemic sooner than 100 years. And so I think we all need to be aware that that's a market force. The pandemic is a market force that needs to be addressed. Now, I will readily admit, and I think Osagi will as well, that I'm a capitalist and that innovation largely comes from the private sector. But the government has to exist to resolve and mitigate market failures. And this is a market failure. Not dealing with a pandemic is a market failure. And I agree with the supply chain issues that Osagi mentioned. I think there are some analogies that we can look at, which we in areas where we build policy that we can model and mimic. We have something in this country called the Strategic Petroleum Reserve, right? It's a reservoir of oil to mitigate against shocks in the oil supply. Why don't we have a strategic healthcare reserve that does exactly what Osagi is mentioning, which accounts for the supply chain, the delivery, and the access of key materials, both to the raw material side, to the services side, to the finished product, and delivery to patients and customers. Something as so minuscule, seemingly minuscule, that of swabs, for example, those things that they stick up your nose to sample for COVID-19 testing, right? There are really only two companies in the world that makes those swabs. One is located in Maine, and the other is located in Italy. If you're interested in such mundane subjects, Bloomberg Businessweek covered this extensively in their latest issue. But that means that we're vulnerable collectively to the smallest element. So it's always the weakest link in the supply chain that determines success. I think that there is concern right now about, in the vaccine area, some of the components that have led to the novel mRNA therapies may be in short supply also. So we've really got to think ahead on these issues, think strategically, and have public-private partnerships that reflect the kind of strength and resiliency we want to see in the healthcare system overall.
And I have to go back. I think we will be remiss if we don't go back and talk fundamentally about the structural inequities that this crisis has shown. The topic of this talk is what's going to happen in a post-COVID world. Well, the post-COVID world, my mother's people say that you see a cripple and the cripple is carrying a load on his head, and you complain that the load on his head is warped. The problem is not with his head; it's really with his feet. The post-COVID world, we have to look at the feet of what is going to happen. The inequalities in our system are structural. Citibank had one of their leading economists did a very thorough review, and they published it recently. And they showed that the US economy had lost $16 trillion, T as in Tom, $16 trillion as a result of structural racism. Now, how is that smart? How is that a wise thing to do? How is that a cruel thing to do? How does that make any sense? It doesn't. And if we don't address these structural issues, we will not be able to have a post-COVID world that makes us stronger and makes us better, makes us safer, and makes us more prosperous. The inequalities, the structural inequalities manifested themselves during this period on many levels. It manifested themselves first on who are frontline workers. Those who were most exposed were those who were, filling up our grocery stores, and who were working in our hospitals, and who were doing all the things that we take for granted, but that are required for our system to survive. So because there was a disproportionate number of people of color in those jobs, they got much more exposed to the crisis, to the virus. And then look what has happened on the other end. We now got the vaccine, and even in the distribution of the vaccine, those who were most exposed many times are the ones that are the least in terms of getting access to the vaccines. These fundamental structural inequalities hurts all of us. And I was very pleased that Citibank's report showed $16 trillion. I'm a committed capitalist, and Steve and I joke about this all the time. I just don't know how that is smart. And I would love someone to explain to me how that's a cool and smart thing to do. So we've got to start addressing these issues. And if we don't intentionally focus on these issues, they will not be resolved. Our normal process has not worked, as we have seen. So again, this is that old saying that never waste a good crisis. It sounds a weird thing to say, but this crisis should allow us to re-engage and recommit ourselves to trying to create a more just society, because it helps all of us, and we lose so much money by not doing so.
Yeah, I think that's spot on. And if you look at it not only in the U.S., but the income disparity that's growing across the world, it's alarming. And a lot of these factors were in place before the pandemic, and the pandemic has simply exacerbated them. And so this is, I think, a moment for us collectively in the U.S. and elsewhere to look at how policies have been developed. And look at the tribalism around those policies, the political divide that's caused them to essentially continue doing what we're doing and creating bigger problems for ourselves. And so there's an element here where those of us that consider ourselves, problem solvers or moderates or people that believe in governance have to step up and insist that we try different ways of looking at things. We simply cannot continue policies that have continued that divide, regardless of who's in office or regardless of what political theory is in place in the time. And then if you look at the shifting economics around the world, where populations are growing in Asia and in Africa, and the amount of investment that is going to those areas and who is doing the investment, I think there's a geopolitical issue behind that as well that we need to be concerned with as well. But all of it suggests to me that here in the U.S., we need to step up once again and be leaders in the world, not simply watch everything that's going on around us happen. I think the earlier panel identified that China is the biggest investor in Africa right now. That should be greatly concerning from a geopolitical standpoint for us in the U.S. And for some reason, it's not caught the fancy of the capitalists, the investors in the U.S. as yet to make that investment in these areas, which could lead to greater convergence of economic interests around the world. So I absolutely agree. We can't stand for this. It doesn't make sense economically, and it doesn't make sense morally either.
Steve brought up the question of China, and Judith Pryor, Director Pryor, brought it up, and previous speakers brought up China and what is happening on the economic level and the percentage of world trade that they are getting. I would point out maybe one more thing, and maybe two things that I think we should be really focused on, because these are fundamental issues that are staring us in the face right now. Right now, the only asset class that has unlimited capacity for growth and wealth is the knowledge-based economy. It's the only asset class. There are 26 individuals right now in this world that have collectively more wealth than 3.8 billion other human beings. So there are only 7 odd billion of us in the human species. So you've got 26 folks that have more wealth than half the human species. Do you know the basis of their wealth? It's all intellectual property. It's all knowledge base. 38.2% of the US GDP is derived from the knowledge-based economy. So what has this COVID period shown us? Guess which asset class increased in the greatest amount of wealth during COVID? The knowledge-based economy. I mean, this is the new global currency. This is the future. This is today. And guess who's one of the major players, the fastest growing player in the knowledge-based economy on a global basis is China. So, if the interesting thing about the knowledge-based economy is that its mint, if this is the new global currency, its mint is the product of the human mind. It's the most limitless thing that we know. We cannot fathom a limit to the human mind and its creativity. Therefore, if we are going to be competitive internationally in this sector, we have to harness the totality of the human minds we have in America. In 2016, we had 6 Nobel Prize winners in the sciences in America. 6. That was phenomenal. Most countries never get 1. We had 6 in 1 year. 100% of them were immigrants. 100% of them were immigrants. If we didn't have an immigration policy that brought in the best and the brightest from throughout the world, we would have had 0 Nobel Prize winners in the sciences in 2016. So there are policy issues that matter. These are not just transient, interesting, politically emotional issues. If I'm a committed capitalist, if we're going to make real money and we're going to continue to grow the economy, these are the things we have to tap into, which means we have to tap into the totality of the human resources in America. We cannot have systems that take out 50% of our population by saying that we shouldn't support women and young girls in the sciences. Why wouldn't we do that? Madame Curie got 2 Nobel Prizes, 2. She's the only human being that has obtained 2 different Nobel Prizes in 2 different disciplines of the sciences. The only human being. So if we have policies that do not support young girls going into STEM, who do we think we're hurting? We're hurting ourselves. If we don't have diversity in terms of every conceivable type of diversity in the sciences, we're hurting ourselves. Alan Turing, who's some we consider the genius that started artificial intelligence, he was gay. Fantastic. I mean, and he did work that helped us win the Second World War. So in the knowledge-based economy, diversity and creativity is what allows us to grow. And this COVID period has shown that those who made the most money, the highest increase in wealth, were those who were in the knowledge-based economy. And again, that's something that we've learned. And we should consider that for our post-COVID period. How do we build on that?
What Osagi is saying is backed up by a number of factors, including stock market performance, right? If you look at the cluster of the top 5 companies in terms of performance during this pandemic, they're all related to the knowledge economy in some way, shape, or form, right? And yet they are also part of the disparity in wealth that we talked about before. So this is the quintessential double-edged sword here, right? And so I agree. Knowledge powers innovation. I think the underappreciated segment of the economy remains manufacturing, though. And this links to some things that we talked about before, which is right now as we sit in this pandemic, with some of us working at home and clearly not distancing from ourselves from our previous day-to-day routine, the only way we're going to get back to normal is if we have products, the vaccines, the tests, the therapies that actually do something. Simply Googling at home is not going to help the economy. Simply buying things off of our economy is not going to get us off of Amazon is not going to get us back to normalcy. We have to have better products and we have to manufacture them. All right, that's the essence of how we protect our intellectual property, how we create jobs, et cetera. So I think that that's another market failure that needs to be addressed. If you look at the broader issue related to life sciences, is that many of these new products have to be related to global public health, which, as Osagi and I both know, is not the sweet spot if you're trying to create shareholder value in the marketplace. At least it hasn't been so far. The issues and the price points of selling products to thwart global public health are not the attractive segments in the life science segment, right? There are no billion-dollar blockbuster drugs that you can assign to that cause. You're talking about making progress slowly and making sure that you have price points that reach low and middle income countries in particular. So here's another area which I think that the United States can take a leadership role. Hopefully re-engaging in the World Health Organization will help that as well. But the risk, again, from a geopolitical perspective, is that other countries like China will begin to take the lead on this, from everything from the knowledge economy to the innovation to the actual manufacturing, in which case I think we as a nation will lose our edge in terms of a trading partner and having power in the global marketplace. So there's a lot to unpack with everything that we just talked about, but I think it all leads down the road of we need to do better as companies and as a country to better participate in what the global needs are, particularly in public health.
And maybe I'll make one more comment on this issue. Both Director Judith Pryor and Linda, both of them made comments about Africa and the US. So here's the reality, right? Judith mentioned that the fastest growing economies, some of the top fastest growing economies are in Africa, but also 10 of the youngest countries are in Africa. So if you're going to talk about future markets, if you're going to talk about the ability to sell products and make money out of it, there's gold in them hills. That's where it is. And there are people, there are strategic thinkers like China. And we keep on talking about China, but there are strategic thinkers who are placing bets, who are getting a position in those markets in anticipation of that growth. And for the US, if we ignore Africa, it's not a smart thing to do. We're doing it at our own cost. So, and what is particularly bizarre about that is that Susan Powers always points out that 20% of the presidents and prime ministers in Africa have a US educational background. So we have actually a built-in advantage that we are not tapping into. So we really have to think strategically. This is the time to do that, to think strategically. How does the public-private partnership work? How does government policy with the private sector? How do we do a hand-in-glove play to maximize the value to ourselves, and by so doing, on a global basis? And I think this is a great time to do that.
And just to take that point and apply it to our local economy here in the greater Philadelphia area. Our great strengths in meds and eds, as we say, the medical arts, the great hospital systems, the great innovation that comes from them, the educational institutions as well, they can have a role in bridging that gap. I always have to remind ourselves that when we take foreign students, and matriculate them into a Philadelphia-based university, that's an export. That gets credited as an export. And the more we do on that, and the more we seed relationships in countries around the world that are growing and young, we can actually influence the outcome and the growth in those countries and their connection to us and our connection to our greater Philadelphia community. And what could be better to be able to have an impact on global issues by strengthening our local economy?
Well, what an interesting new world indeed. And I must say, you gave us so much food for thought. Things like the pandemic is really a market force, and that not dealing with the pandemic is a market failure. The idea of building a strategic healthcare reserve, more public-private partnerships in the healthcare system. You also touched, which I think was very important, upon the notion of the structural inequalities and the need to tap into the great human resources that we have here all around us, and that the diversity is what will allow us to grow. So we do have time for some questions. I see questions already in the Q&A. One first question here. So much of the world is focusing on developing life sciences and biotech. So what can Greater Philadelphia do better in supporting these sectors here to further its global leadership? So basically the question is, how can we support entrepreneurs in these sectors?
Well, I think we're already very fortunate. I think Steve mentioned it. We are known for meds and ed. Within a 100-mile radius of Philadelphia, there are over 100 different colleges and universities, and a lot of them are in the life sciences space, and that's great. Two of the vaccines out there right now, the Moderna and the Pfizer vaccines that are mRNA vaccines, are based on technology that was developed at Penn and were licensed to those two companies. So we are smack in the middle of the life sciences space. What can we do to enhance it further? Clearly, capital matters. In a capitalist system, you can function without capital, right? So making more capital available matters. Clearly, Steve led an amazing organization known as the University Science Center in Philadelphia, where the focus was how to commercialize technology out of the universities. Institutions like that already exist need to be supported. So the Science Center, Ben Franklin Technology Partners, and other institutions that are local, that are already up and running, needs to be supported. The encouragement of entrepreneurship. And entrepreneurship, by definition, means that there's risk. So some will work, some will not work. But you keep on shooting on goals, and eventually you move forward. And so supporting entrepreneurship across the risk continuum, I think, will also be important. And of course, we've got to tap into our young people. There's a great program in Philadelphia known as Code for Kids, where they're taking middle school kids and teaching them how to code. They're fantastic coders. And we're going to tap into that across the board. So that includes all of our diversity across the board. And if we do that, we will continue to encourage and develop technology, not just in the life sciences, but across the board, that would help our economy.
Yeah, thank you. And maybe in closing, Dr. Tang, also your advice for young entrepreneurs. How can we get young people engaged and become scientists and entrepreneurs as well, taking risk?
Yeah, everything that Osagi mentioned, I agree with. And I would add to that we have to make life sciences available, not only to those that have PhDs and advanced degrees, but those that have GEDs as well. I think there are some great programs, particularly in West Philadelphia. Matt Berkheiser in the University City District has a West Philadelphia Skills initiative that will help that along. But I think that introducing them to the world of entrepreneurship and what risk-taking means and how you accumulate capital, how you sell ideas at a very early age will eventually lead to the kind of entrepreneurial ecosystem that we are looking for here. And I'm very confident that it can happen.
Well, thank you so much. That's great advice. Dr. Tang, Mr. Imasugi, thank you so much for this inspiring conversation. We will now take a 10-minute break, and we will be back at 10:30 Eastern Time sharp in 10 minutes.
Bye-bye.
Good morning and welcome back from the break. My name is Gary Bean, and I'm a partner in the law firm of White & Williams, where I chair the International and China Business Practice Groups. I also proudly serve as chairman of the board of the World Trade Center of Greater Philadelphia. On behalf of the board of directors, I'd like to thank you for attending today's event, and I'd like to extend our appreciation to the speakers and presenters that we just heard. I am always so impressed at the expertise that we are able to assemble and the great international business insights that we learn, particularly in these challenging times. I hope you are enjoying today's Global Business Conference, which is one of the World Trade Center's signature annual events. And special thanks to Temple University for partnering with us today. Personally, it's very special for me to be back at Temple, albeit virtually. My father spent 3 decades of his career here. I am a proud graduate of the Fox School of Business, and this spring, my son Christopher will graduate from Temple. I am very proud to be part of the Temple family. Back to today's conference. As someone who has spent over 20 years doing business in China, I very much look forward to our upcoming panel, Markets in Transition. Our experts will discuss the current state of the market in China, and we will also learn about current developments in the Middle East, North Africa, and Southeast Asia. Special welcome to our friend Craig Allen, President, U.S.-China Business Council, and David Hamad, President and CEO of the National U.S. Arab Chamber of Commerce, who are joining us at our conference once again. And finally today, our member companies, Sam Myers Steel, Sun Hilo, and Van Horn Metz, are going to talk about how they have been navigating the ever-changing global landscape, and they are here to tell their stories. Tiffany White King, National Practice Partner, Mazars USA, will serve as our moderator. Our member and client companies are the backbone of the World Trade Center of Greater Philadelphia. Even during the current pandemic, our companies managed to generate over $105 million in export sales. We are very proud of this accomplishment. Our work in international trade will continue, and I hope you will also remain supportive of global trade in our region. So please sit back and enjoy the remainder of our Global Business Conference. To stay up to date, please visit our website at www.wtcphila.org and consider becoming a member of our international community. Thank you very much.
Good morning. Welcome again to the Markets and Transition panel. I'm Richard Deeg, Dean of the College of Liberal Arts at Temple University. I'll be moderating this morning's panel. Once again, we have 3 panelists with deep expertise in different regions of the world. First, Craig Allen, President of the U.S.-China Business Council. Mark Mealy, Senior Vice President Policy for the U.S.-ASEAN Business Council. And David Hamad, President and CEO of the National U.S. Arab Chamber of Commerce. I'd like to begin with a fairly broad question. I'm going to ask each of the panelists to speak to this in respect to their own region. And that question is, how would you characterize the bilateral and commercial relations between the United States and your region under the new Biden administration? So I'll start with Craig on that question.
Well, Richard, thank you so very much. What a pleasure to be here with David and Mark. I so much enjoyed the previous panel. Let me just say U.S.-China relations are as complex as they've ever been. If you were to ask the White House today about China, they'll tell you that the China policies are under review. They'll also note, if you kind of push them, saying business people in Philly need a little bit of clarity, they'll tell you that Catherine Tai, the new USTR, has been in her office for 2 days and that she needs a little bit of time. Now, I think that it is fair to say that American companies doing business in China are up against some headwinds. A few companies benefited from President Trump's tariffs, but most were hurt. And U.S. exports to Philly declined to China declined 20%. Chinese investment in the U.S. declined 90% over the last 2 years. This is not all due to the Trump administration. There's also complexity on the Chinese side. Despite it all, China is our largest overseas market. Canada and Mexico are larger, but China is #1 overseas. And therefore, China will continue to deliver about 30% of global growth. And therefore, every CEO needs a China strategy. Let me stop there. Thank you.
Great. Thank you, Craig. Mark, what would you say?
First of all, again, thanks again for the great opportunity to be here. As someone who grew up in Philadelphia, West Philadelphia, fond memories of riding to Broad and Olney to go to Central High School. It's a real pleasure to participate in today's event. I would first put on the table for the members of the World Trade Council that the countries in Southeast Asia as a group I would say, have probably gotten more access to senior officials in the White House over the last, well, President Biden's only been in office for about 2 months now, than I would argue almost any other group of nations in the world. In fact, early this morning, I actually participated in a discussion with members of the US business community and the White House National Security Council, talking about sort of the forward-looking efforts for the Biden administration to really re-engage with the countries in Southeast Asia. There's no question that this administration, I think, is going to move a bit closer to the value proposition that Southeast Asia, 10 countries with a combined GDP in excess of $3 trillion US, a population of over 600 million people, is valuable to the United States of America, not because of just simply a US-China competition or rivalry, but because it's already America's 5th largest trading partner if you combine the 10 countries in the world. I think from that starting point, the overall relationship is poised, I think, for continued improvement. There'll be hiccups and challenges, as we're seeing with individual countries. The current situation in Myanmar, for example, represents a challenge. But I think overall, we're going to be moving in a period of overall US-ASEAN relations that I think will be very positive going forward because of the real fundamental economic value of that part of the world to the United States.
Thank you, Mark. David, how are things looking with the Middle East and North Africa? David, can you hear us?
Richard, can you hear me?
Yes, now we can.
Thank you so much. The host wouldn't allow me to unmute. Sorry, everybody. Good morning, everyone. In the Arab world, we say, "Eid wahda ma bتزقف." One hand alone cannot clap. In other words, it's really all about the partnerships. And I'm very proud to be back here, and I'm proud of our long-standing partnership with the World Trade Center of Greater Philadelphia. It's a little bit difficult to generalize about 22 countries that stretch across North Africa, down to the Gulf region, and then up to the Levant region, but I'll do my best. In the transition from the Trump administration to the Biden administration, there are differences in style and substance. Mr. Trump was a transactional president. He was very focused on big ticket sales, especially in the defense and security sector. And his approach was typically bilateral, particularly regarding the Arabian Gulf countries, US Saudi, US UAE, US Kuwait, and others. Mr. Biden is more of a multilateral president with a major focus on alliances. I think he has a soft spot for small, medium-sized enterprises, which bodes well for World Trade Center member companies. President Biden also believes in accountability, which was not a high priority of the Trump administration, with all due respect. So human rights and democracy are back on the table, and you can expect to see many fewer winks and nods during this administration. A change in White House presents an opportunity to modify policies across the Arab world, and we're starting to see some changes already. In Yemen, for example, Saudi Arabia has proposed a ceasefire that may succeed where others have failed. In Libya, combatants from around the country broke bread and agreed on an interim government recently. In the Arabian Gulf countries, there is now reconciliation among Qatar and its neighbors after a blockade of 3.5 years that achieved, in my opinion, very questionable results. It remains to be seen how the new administration will deal with Iran. But personally, I don't believe that President Biden will give a free pass to Iran in the same way that he will not give a free pass to China. One last thing, policy discussions like these often focus on seemingly intractable problems, and the MENA region has more than its fair share of those. The Arab world does face challenges, of course, but it's also a beautiful, and historic part of the world with a great affinity for the United States. I believe that all things being equal, most people in the Arab world would prefer to send their kids to American schools, take their vacations in the United States, and partner with US companies. So that's why I'm here today, to help your companies sell products and services to a part of the world that loves to buy American. Richard?
Great, thank you, David. Obviously, COVID and pandemic are a very important topic these days. And then earlier this morning, we heard quite a bit of general discussion of the impact of the pandemic on the global economy. But I want to ask a question to all three panelists that gets a little more specific, and that is how you see the pandemic impacting growth in key sectors in your region, like life sciences, information technology, biotech. Will it impede or stimulate growth in key sectors? Let's turn to Craig first.
So the Chinese have a record of managing crisis very well. And that goes back to the Asian financial crisis 20 years ago, the great global recession 10 years ago, or COVID. COVID obviously started in China, but they reacted very harshly and had sharp, short pain rather than a long, extended pain. And they have come out of it very strongly. They will grow, the consensus forecast is 7 to 9% in 2021, 2022. The government has said more than 6%. And that's led mostly by manufacturing, but the growth is really across the board, except for foreign tourism and foreign travel, which is still stymied. So growth like that is exceptional, even for China, which has a long history of high-level growth. This is above their par for this level of development. It will certainly come down in 2022, 2023, probably closer to 4 or 5%. But for this year, it is go, 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 probably across every sector that does not include person-to-person meeting like travel and education. Sorry to the universities, the great universities of Philadelphia.
Well, we hope to recover. Thank you, Craig. Mark, how are things looking in Southeast Asia from your perspective?
Sure. So the situation in Southeast Asia, I think, is both unique, but also a little bit common for many parts of the world. As we all know, COVID represented a sort of a unique shock to the global economy in terms of its impacts, both in terms of the supply side of the equation, but also the demand side, when obviously government policies required people to, basically be restricted in terms of their movements, et cetera, et cetera. Most forecasts, if you look at the ASEAN region as a whole, which prior to COVID was growing on average between 5 and 6% per year, COVID certainly created a shock, and we certainly saw downturns in most of the economies, the bigger economies in the region. Malaysia, Singapore, Thailand, 2020 all had sort of negative GDP growth. The one exception was, of course, Vietnam, which was one of the few countries that actually still registered positive GDP growth in 2020 in the midst of COVID. Looking forward, ASEAN is forecasted to again return to kind of like a sort of a U-shaped GDP in recovery in GDP. So again, we're seeing estimates between anywhere between 4 and 7% GDP growth in 2021 this year. And in particular, I think the digital economy, which I know is an area of particular interest to many American firms, ASEAN before COVID was always one of the fastest growing regional digital economies in the world. As we all know, COVID has in many ways accelerated sort of the digital transformations of businesses in order to try to provide goods and services to people's consumers. So we see, again, that being a real leader in economic recovery in Southeast Asia in the digital space and e-commerce.
Great, thank you, Mark. David, what would you say?
Thank you, Richard. As we know, the pandemic has created challenges all over the world, but I think it's been especially tough on the MENA region, whose economies still depend heavily on oil. In 2020, the pandemic created a supply shock, just as Mark said. Outputs from US factories fell as workers battled COVID-19 and shipments around the world faced major delays. But the pandemic also created a massive demand shock. Who wants to buy oil, fuel, when transportation and economic activity around the globe grinds to a halt? And when no one's buying your oil, budget deficits kick in and big ticket projects get put on hold, projects that depend on American goods, services, and expertise. In fact, in the MENA region, we faced a double whammy last year. On top of the pandemic, there was an oil price war between Russia and Saudi Arabia that tanked contract futures. In the case of West Texas Intermediate, a benchmark, prices plummeted to an impossible negative $37 a barrel. So you won't be surprised to learn that US exports to the MENA region dropped about 27% last year, pretty much along the same lines as Craig said to China. However, I'd like to argue that what goes down must also come up. And I think we're witnessing a surge in demand for US goods and services as we move slowly, painfully beyond the pandemic. If it's true that every dark cloud has a silver lining, then there may be a number of silver linings here for the MENA region. First, some countries have been using the crisis to diversify away from hydrocarbons, and I'll say more about that a bit later. Second, some countries have used this crisis to strengthen localization, training locals to take over jobs that have historically been worked by expats. On this point, it's a little bit difficult to generalize, but in Egypt, for example, the vast majority of workers are Egyptians, but conversely, in the Arabian Gulf, most of the workers are expats, expatriates. So what do you think happened when the pandemic hit? Many expats picked up their stakes and went home, creating chaos in the labor force in some countries. So the silver lining here may be that locals were presented with an opportunity to cut their teeth professionally during the pandemic. It was especially tough on countries that depend on tourism. Think Jordan, Morocco, Egypt. And if you're not into antiquities, a place like Dubai, tourism dried up overnight, but it's on the road to recovery now. And if there is a silver lining to this part of the story, it must be that certain Arab countries were able to dodge a bullet like the UAE, where Dubai was able to postpone Expo 2020 until October of this year. And Qatar, which is hosting the World Cup in Doha next year, is banking on vaccines to bring the pandemic under control before the first kickoff. Richard, back to you.
Thank you, David. So with this next general question, I want to drill down to the brass tacks. Ask each of you, what would be the leading growth sectors in your respective market or region that could translate to opportunities for companies in the greater Philadelphia region? So knowing the companies we have here, where would you see those opportunities in your region? So once again, I'll start with Craig.
Philadelphia is so diverse and so rich in industry and agriculture. There's a lot to grab here. I would say certainly chemicals is doing very well. Healthcare is another area that's doing very well. Out of Western Pennsylvania, there is a lot of metallurgical coal going to China right now. We just had a magnificent healthcare panel, and a lot of equipment and services are going to China. And that's true for across the whole gamut of the life sciences sector. I would say services are also very strong, be it the port, be it the airport, the education in particular. So Philadelphia is blessed with a very diverse economy, and I would say all of them grow with Chinese growth. Thank you.
Great, thank you, Craig. Mark, what are your thoughts?
Well, you know, it certainly mirrors a similar description that Craig offered. in terms of the diversity, I think, of markets or products or industries. So Pennsylvania as a state does about a 1 billion to about $1.5 billion per year in goods and merchandise exports to the 10 countries in Southeast Asia. If you look at particular markets, I would say, Singapore is probably the location where most American investment flows to. But if you look at the bigger economies, again, like Indonesia, Thailand, Vietnam, Malaysia, that's where that over $1 billion a year in goods exports, like chemicals, computers and electronics, and machinery. And then I think if you toss in the fact that, New Jersey, which also touches in the greater Philadelphia area, is actually doing about $1.7 billion a year in goods exports to Southeast Asia, it does give you a sense that the region does have a nice foothold in terms of shipping products to that part of the world. I think in terms of growth opportunities, food, I think, definitely represents an opportunity for continued growth in the region. Transportation equipment, particularly as economies in Southeast Asia continue to, obviously get COVID back under control, more like what already exists in Vietnam, and begin to travel more. I think that represents a good space also for further growth, in addition to, again, many other services, whether it be healthcare services, education services. All those things were already before COVID, rapidly growing areas of opportunity for U.S. producers of goods and services. And I think, again, once COVID sort of gets under control, you'll see those trends, again, healthcare, education picking back up.
Thank you, Mark. David, what do you see as some of the big opportunities for Philadelphia area firms in the Middle East?
Oh, thank you, Richard. U.S. exports have traditionally been part of four main economic drivers to the Arab world: oil and gas, defense, infrastructure, and consumerism. And those sectors are still very important, but I would prefer to focus today on emerging sectoral opportunities. And it's going to sound like Craig and Mark and I are singing off the same song sheet, I think. Going back to our first question about the Trump administration versus the Biden administration, Mr. Trump placed a big bet on the extractive industries like coal. Mr. Biden, on the other hand, is focused on climate change. So MENA countries have put a new emphasis on renewables, like solar. The MENA region has no shortage of sunshine. So Philly area should be looking at high tech, including green tech, smart devices, and an array of consumer technologies. The Arab world loves gadgets, and I want to highlight technology's role in driving innovation. Innovation is a vital part of transitioning from a hydrocarbons-based economy to a knowledge-based economy. And if you want to play to Philadelphia's traditional strengths, how about that higher education? How many colleges and universities in the Philly area? 30, 40, 50? I guess that depends on your definition of greater Philadelphia. So universities are springing up all over the Arab world, including the soft opening last month of the American University in Baghdad. And these schools are looking for U.S. affiliations. And healthcare. Greater Philadelphia is now home to more than 800 life sciences companies and 15 major health systems, and the Arab world needs our expertise. And I have to say, on a personal note, Philly's healthcare system has touched me personally. I would be remiss if I didn't mention Philadelphia International Medicine, a longtime member of our chamber, and also Penn Medicine, where my ailing father has received excellent care. Thank you both. And why are life sciences and pharmaceuticals important? Because they could help to drive R&D across the Arab world. And because they focus on youth, the next generation of leaders who make up 2/3 of the Arab world's population. So that's the good news, but it's also the bad news. The good news in the sense that burgeoning populations will guarantee large numbers of consumers and markets for decades to come. But it's bad news in the sense that the MENA region will have many, many mouths to feed. I guess that's good, though, when you think about exporting food from the Philadelphia area. Secretary of State Colin Powell used to say, hope begins with a paycheck. And Arab youth, like young people all over the world, need that hope. Because what happens to Arab youth who can't find jobs, they become more susceptible to recruitment by the bad guys. So at the end of the day, economic growth is key. No country in the world knows more about economic growth through innovation and entrepreneurship than the United States does. And Arab world will be looking for education, training, and job creation. And with the wealth and expertise and resources that you have in the greater Philadelphia area, you need to be part of that. Richard?
Great. Thank you, David. I'd like to transition to some questions that are specific to particular regions. And I will start with Craig again. And obviously the Biden administration is still pretty new. Its policies towards China are in development, but I wanted to ask if you could speak a little bit to what you foresee in terms of possible changes in tariffs, sanctions, export controls, IP issues in the next couple of years in China that could impact U.S. firms.
Well, thank you, Richard. Let's take them one by one. On tariffs, I asked the question of USTR earlier this week, and they said that the tariffs are under review. It is our hope that the 20% tariffs on goods going either way across the Pacific will be removed by the end of 2021 as a result of increased market opening in China. So we believe that a deal can be done, a so-called phase two deal. But that's uncertain. And there are constituencies behind the high tariffs that will make it difficult. Tariffs are easy to raise and difficult to bring down. On export controls and sanctions, the Biden team has already signaled where they're going. They have increased export controls against Huawei, and they have added sanctions as a result of recent legal changes in Hong Kong. So I think it would be naive to suggest that there's going to be any relaxation in the near term, despite the ongoing policy review. And so, at least in my view, there is hope that the tariffs will go down within the foreseeable future. There's no certainty there. If they do not go down, then economic relations between the two superpowers are going to remain distorted and unhealthy. And thus, I hope that we'll get back to a more normal space that I will argue is very good for Pennsylvania companies along with other companies in the US. Thank you.
Thank you, Craig. I'd like to turn to Mark with a different question. Even before COVID, but certainly during COVID, many of the ASEAN countries have benefited from the switch in supply chains. Firms have been looking for more reliable suppliers. Which countries in the region have really benefited from this, and what do you think this means going forward for U.S. companies looking to the region?
Oh, thanks. That's a really great question, and I spend a lot of my time working with American multinational corporations very much in this space. So let's be clear: the evolution of global supply chains running through the Asia Pacific region, particularly via China, were already before COVID in a process of evolution. As we all know, costs of doing business in China have been going up for many, many years, which became a catalyst for people to look at maybe places outside of China. Other challenges that you face in China, like protecting your IP, was also already an incentive for certain types of businesses to maybe look at alternatives. Then you throw in the US-China tariff conflict, became another catalyst for companies to think about, how do I maybe remove some of my business activities outside of China so I don't get caught up in the US-China tariff situation? And then COVID hits, which has created a new incentive for global firms to say, wow, I'm now realizing maybe my supply chain is not as resilient as I thought it was. maybe I need to look at continued evolution of my supply networks to make them more resilient. For all of these reasons, countries in Southeast Asia have really and clearly emerged as some of the most commercially competitive alternative locations. So a lot of the folks, I think, in the headlines have been like Vietnam has really been a big benefactor of this evolution of supply chains. Other countries like Indonesia, as well as Malaysia, have also been, I think, big benefactors. And I would throw out one more dynamic that has further influenced why many countries in Southeast Asia, again, are emerging as globally competitive commercial alternatives. And that's because the countries in Southeast Asia, led by Vietnam and Singapore, are also some of the world's most active users of preferential free trade agreements. And once you overlay that reality, it's now given another incentive or a value proposition by which certain firms have said, okay, I want to be outside of China for all the reasons I just mentioned. Oh, well, maybe I look at Vietnam because I think I can find what I need, costs are good, et cetera, the rules are clear. Oh, but now you also tell me that because of the EU-Vietnam Free Trade Agreement, if I'm in Vietnam, I get all those other benefits, plus I now get duty-free access to the European Union market. That now has become a new value proposition by which some of the markets in Southeast Asia who are also plugged into other free trade agreements have become so competitive and really achieve a lot of spotlight.
Actually, Mark, I'd like to follow up on that very point. What do you see for the prospects of ASEAN moving towards a EU type of common market? You know, there are a lot of trade agreements in the works. What are the possibilities, and what might China's role be in such a market?
Yeah, that's a very good question. I think people should understand. So the 10 countries in Southeast Asia already have in place what they call the ASEAN Economic Community, which in a nutshell means if you have a good or service in Malaysia, you can pretty much export that good or service duty-free to any of its neighboring countries. That being said, the 10 ASEAN countries do not aspire to create a quote unquote another version of the European Union. That's not their vision. That's not their goal. That's not what they're trying to do. What they are trying to do, though, is to say, if we are active participants in big free trade agreements like the CPTPP, like the new Regional Comprehensive Economic Partnership, RCEP agreement, like bilateral deals between Australia and Indonesia and EU and Vietnam, what they're really saying is we want the entire world, and particularly American companies, to really see any one of our 10 countries as an optimal gateway to all of the major markets in Asia: China, India, Indonesia, Japan, and Korea. That's really what they're positioning Southeast Asia to be, is that gateway to all of the big markets. Because as we all know, we don't have a free trade agreement between America and China. So therefore, if you're based in Philadelphia, you're exporting a good, you're probably going to pay a tariff for when that good hits China. However, if you're in Southeast Asia, once the RCEP agreement goes into force, which many think by the end of this year, you could be located in a Malaysia or a Thailand, and you'd be able to export into China duty-free. And I think that's what they're selling.
Thank you, Mark. I think that's a very interesting and important point. David, a question for you. So the Abraham Accords, a major milestone development in the Middle East. How do you see this impacting inter-Middle East relations and business opportunities in the region?
Thank you, Richard. Let me just pick up on a point that Mark was making, and then I'll shift to the Abraham Accords. About free trade agreements, we have 4 countries in the Arab world that have free trade agreements with the United States. And we've noticed several things. First, these are relatively small countries, but they are, because of the FTAs, punching well above their weight when it comes to exporting to the United States. And they are ranking very high among the list of countries that are exporters to the USA. And second, I think beyond exporting, countries that have signed FTAs with the United States The rest of the world recognizes that this is kind of the gold standard of FTAs all over the world. So if they've got it going with the United States, they must be doing something really right. And so that's increasing investment into those countries. So I hope that builds on the very excellent points that Mark made. Now, to your question, Richard, about the Abraham Accords, for those who may not be familiar, this is an agreement that enshrined the normalization of relations between Israel and the United Arab Emirates. The concept was then extended to some additional Arab nations. And the Accords and the Abraham Fund that is under discussion to fund projects have the potential to create business opportunities for US companies, and I believe that they will. But allow me to play contrarian for just a moment. The normalization of relations was the easy part, in my opinion. After all, these countries have enjoyed back-channel relationships for decades. The hard part is peace, and there can be no peace without involving the Palestinians. So it's my hope that the Arab nations that have normalized relations with Israel will use their good offices to promote business, but also to promote peace. Because without genuine peace between Israelis and Palestinians, the Abraham Accords and the region will never achieve their true potential. Richard?
Great, thank you. We have a question from the audience I'd like to ask. It's a sort of a follow-up to Craig, and that the question is about the recent Anchorage meeting and whether you see this as substance or theater, or what mix of the two do you think was going on there?
Well, that's a pretty easy question to answer because the first 35 minutes where the press was in the room was just fantastic theater. How dramatic and unexpected. But once the doors were closed, there were 8 hours of very good conversations. And the readout from the two sides is a little bit different. The readout from the U.S. side stresses, good conversations on Iran, Afghanistan, North Korea, other strategic issues. The readout from the Chinese side stresses that good, serious discussions on Taiwan, Hong Kong, Chinese sovereignty, and future engagement narratives. I'm sure that both of those are true, that both sides are reflecting their own talking points. But the best way to look at this was a level setting, a stock taking, a clear definition of red lines, allowing for future collaboration. And that's what we are hoping to see in the near term, possibly starting April 22, when President Biden is going to host a climate summit. And President Xi Jinping may or may not be attending, and there may or may not be bilateral meetings at that time. Thank you.
Thank you. Yeah, actually, David, Craig just touched on a point that I wanted to ask a question about, and that's climate change, which is another big topic of the moment. We know the Biden administration has placed a great deal of priority on it, plans a lot of investment. The Chinese government has also talked about investing a lot in green technologies. The Europeans have. So my general question is, in this context, and this is a question for all of you, what do you see as opportunities for perhaps Philadelphia area firms in this general area, but perhaps also the competitive threats they might face from coming out of your region? So I'll start with Mark. What are your thoughts on that, Mark?
Yeah, I think it's a really spot on question, and it actually dovetails nicely to that first question about, the new trajectory or refreshed trajectory of US-ASEAN relations. There's no question that I think there's a real synergy between the Biden administration's and really America's competitiveness in climate and renewable energy spaces, technologies, energy efficiency kinds of things, and the need or the demand for such efforts in many countries in Southeast Asia. Many of our audience, I hope, would know that when it comes to certain environmental challenges, whether we're talking about ocean plastics, whether we're talking about rising sea levels, unfortunately, for some countries in Southeast Asia, those are really serious challenges. And therefore, they're on the minds of policymakers and business leaders in those countries. And if the American government and the American private sector is able to really project that there are opportunities to work together on some of these things, I think that's an area that's very, very ripe for collaboration and cooperation going forward. I can tell you, for example, that at the upcoming sort of climate event that former Secretary of State John Kerry is sort of leading on behalf of the Biden administration, I can confirm that 4 and potentially 5 of the 10 ASEAN countries will be invited to participate at the highest levels, at a ministerial level, maybe even a head of state level at that event. So I think going forward, that's going to be, again, I think a potentially really ripe area for US-ASEAN relations.
Great, thank you. David, you mentioned earlier that the Middle East is a good place for solar energy. No surprise. What about business opportunities and threats there around climate change?
Well, thank you, Richard. I think this issue of climate change is very near and dear to the hearts of the people in the Arab world, in part because they're producers of oil and there's flaring and there's other issues that affect the climate. And I think they see the writing on the wall. You hear a lot these days in the Arab world about zero carbon footprints, and they're working at it. And I think that's a very positive thing. I talked a little bit earlier about some of those technologies. Do let me make one point that ties in with what you asked earlier. The Arab world is generally a consuming area, much less so, let's say, than China or some of the ASEAN countries, which are producing areas and exporting all over the world. So I don't expect that we'll see any threats from products coming out of the Arab world in the same way that you might say from China. And just to finish connecting the dots here among Craig and Mark and myself, China is a major threat to US business in the Arab world. China is very aggressive. We've already heard about the technology, Huawei and others. Chinese workers are all over the region, supplying a great deal of the labor force. And China takes this competition very, very seriously. So I guess that's one way of saying we as Americans and US companies in particular cannot afford to rest on our laurels at a time when this competition is ramping up all over the world.
I'd like to follow a quick question there, David. So for many years now, many of the oil-dependent countries in the region have been trying to diversify away from oil. And that raises the question, what might be some sectors that Philadelphia area firms could really profit from as they try to build a more diverse economy in the Middle East? Healthcare, for example.
Well, I think healthcare, as I alluded earlier, is a huge opportunity with the life sciences companies that you find in the Philadelphia area, in part because it's such a driver of research and development. And that's really key for the Arab world. It's not that they need the pharmaceuticals per se. It's that they need the R&D that comes with them, the job, the creation that comes with them, the expertise that comes with them that will allow them to produce pharmaceuticals and other life sciences products, not only for the region, but throughout the area. Because if you look at where the Middle East is, particularly, let's say, the Gulf area, within a 2-hour flight, you can access about 4 billion people around the world. So they need that expertise that the Philadelphia area companies have to offer. And I happen to think that life sciences is one area that can have an outsized impact on business in the Arab world.
Thank you. I want to turn back to Craig with the question again on climate change. What do you see in terms of opportunities and threats in respect to China and Philadelphia area firms?
Well, there's a lot to talk about there. I think that no one should question the Chinese government's will to reduce carbon emissions. And they have suggested that they will peak by 2030 and get to carbon neutrality by 2060. And indeed, China has, in terms of human lives, more at stake than any other country, possible exception of India. The Philadelphia area in Pennsylvania plays a very important role. Hydrogen is super important here. And it's an area where Pennsylvania really leads scientifically. And I would argue your natural resources, your hydrocarbons are still needed. The thermal, the metallurgical coal out of Western Pennsylvania is going to be needed no matter what. And the gas that is exported out of Pennsylvania is also going to be needed. And then you could talk, we could go on and talk about grid and making more efficient buildings and EVs, and it's a big subject. And we're going to become more and more entwined with the Chinese. And it's critical to global sustainability that the Chinese move faster rather than slower on reducing their carbon emissions. If the Chinese are not going to meet their Paris targets, then I regret that many of us might become toast, including myself. And I'd rather avoid that. Thank you.
So to quickly wrap up our panel, question for each of you. What would be the top 3 words of advice you would give to companies to be successful in your respective markets? Craig.
Due diligence is that 1 word or 2 word, but due diligence is very important. Intellectual property rights, very, very important. And then personal commitment of the CEO to work through the problems. Thank you.
Great, thank you. Mark.
One, I would say that if you're thinking about, locating a presence in Southeast Asia, Singapore and Malaysia, I think, are the best places for, smaller and medium-sized American firms. It's where all the big guys are, because that's the best place where one can get the most fairer treatment to settle commercial disputes, which we all know can happen in business. Secondly, there's no question that the countries in Southeast Asia represent really the gateway to all of Asia. The fact that you can find business partners who speak English, countries that use, sort of English and British common law. I think, again, if you're thinking about China, you're thinking about Japan, I think one of the best ways to go about going at those countries and getting those markets is via Southeast Asia. And then lastly, there's a lot of resources, including many free resources that are available for businesses in the Philadelphia area. You've got ASEAN governments up in New York City and in Washington that are basically set up to provide resources to American business people. You've got US embassies and you've got AmChams in all 10 countries that are set up to provide support to US businesses that want to look at opportunities. And last but not least, you've got business organizations like mine, the US ASEAN Business Council, US Indonesia Business Council, US Philippines Society. All of those resources, I think, are there for Philadelphia-based businesses who want to get a better understanding about the opportunities in Southeast Asia and then how to go about maybe developing a business development or marketing effort. Thanks.
Okay. David, top 3 words of advice to leave us off.
Sure. I didn't think about not becoming toast, but I love that one from Craig. I think I'm going to put that on my list for the future. Number 1, diversify. Be part of the Arab world's historic transition from a hydrocarbons-based economy to a knowledge-based economy. Number 2, think outside the box. We're living in extraordinary times, and this calls for extraordinary thinking. And number 3, use us as a gateway. If you want to do business in the Arab world, our chamber is here to serve you. Thanks so much.
Great. Thank you, panelists. Back to Robin.
Well, thank you so much, Richard, Mark, David, and Craig, for this great session on markets in transition and for sharing your views on opportunities for American companies in your respective markets. Please join me now in welcoming Tiffany White King, who will moderate our last, but certainly not least session, the Exporters Panel. Mrs. White-King is the U.S. National Tax Practice Leader for Mazars USA, and with her 20 years of international tax experience, I look forward to this conversation on market opportunities, challenges, and lessons learned from exporters. Over to you, Tiffany.
Robin, thank you so much for the kind introduction, and good day to you all. We are so happy to be here with you. I would like to jump right into our panel and take a quick minute to introduce all of our panelists. First up is Mr. John M. Curley III. He is the Vice President of International Sales and Global Marketing at Sandmeyer Steel Company. Next, we have Mr. Barrett Fisher, President of Van Horn, Matz & Company, and Mr. Dave Whitman, President and CEO of Sinhelo Corporation. And gentlemen, wow, what a year we've had with the COVID-19 pandemic, as we've heard all morning long. I'd love for each of you to talk a little bit about your business, what you do, and how your trade has been impacted as a result of the pandemic. And to start, let's turn it over first to Dave.
Okay. Yes, Sinhelo Corporation, we're located in South Jersey, and we basically, our main customers are the air traffic control systems around the world. 90% of our customers are with the FAA, and we're in 50 different countries. What we basically do is we interface radar and surveillance to the automation systems, and we've been around 30 years.
Thank you, Dave. Let's go to John. John, can you tell us a little bit about your business, and also how has trade been impacted as a result of the pandemic?
Sure. Thank you, Tiffany. Sandmeyer Steel Company is a fourth generation family-owned and managed company. We produce near-net shapes out of stainless steel, nickel alloys, and titanium. We currently sell to around 48 countries. Some of the impact of the pandemic is, of course, I have not been able to travel anywhere except here to Northeast Philly, and it has affected our business.
Thank you, John. I know travel has been impacted by all. We've heard that throughout the commentary this morning as well. Is it similar for you, Barry? Tell us a bit more about you and what you do.
Well, Van Horn Metz started in 1950, and I'll add an aside. We were independent, we own ourselves, and we are in the specialty chemical business. And we do a variety of products. And I would say probably in the early 2000s was when we recognized the need to start exporting, importing, and embrace the world markets. And we started to travel then at that time. But I'll add a little commercial for the Philadelphia area. My father and grandfather both worked for Gulf Oil down in the refinery in Philadelphia. So I've always been in the petrochemical business.
So Barry, let's pick it up from there, because we've talked a little bit over the course of the day thus far about some of the limitations, the restrictions that we're seeing as a result of the pandemic. But what about opportunities? Because they certainly are aplenty, and we've teased some of those up a bit. So what are you seeing as some of those opportunities, and where will you focus your business on a go-forward basis?
For now, we'll focus on Canada, because I think sooner than later, we'll be able to head to Canada. We have a regional manager up there, and that's a good place. The other opportunities that we see coming, because we can source and sell anywhere in the world, are from the disconnections from the freeze in Houston, the freight problems. So we'll take advantage of those and figure out what our customers need to keep going. But I got to say, the real issue and the barrier that we're all facing is double and triple freight costs for overseas shipping.
You read my mind, Barry, because I was just going to ask you to elaborate a bit more on the freight issues and problems that you're seeing.
Yeah, we've obviously everybody's had the same problem. The ports, things going out, things coming in, boats stuck in LA, no containers. We've had containers sitting in the port waiting for a carrier to pick it up. And it's a difficult way to navigate. And we hear there's another increase coming in April, and it's pretty difficult. And domestic trucking is the same thing. we'll schedule pickups for carriers and they won't show up for 2 days. And that's a driver shortage. So there's the opportunity.
Yeah, so talk about a hit to operations and obviously cost. Dave, are you seeing the same thing? And also I'd ask you to share with us where you see the opportunities as well.
I've been here thinking about the question, and I cannot really think of any opportunities that have happened in the past years because of COVID.
Mm-hmm.
It's been the worst. We have the same problem with logistics, part shortages. We get hit with the same thing that the auto industry did, where we can't get the processors or lead times to come out on products from what used to be 6 months to get some parts to 15 months. And some fabs have even stopped making the parts, and now I have to figure out how to get it redesigned in the next 2 years. So it's been a challenge. But life is about challenges, isn't it?
Definitely. It's tricky, right, to navigate those workarounds, especially when you're talking about something like transportation and freight of goods. I guess, John, are you seeing something similar, and are you somewhat optimistic about the opportunities that lay ahead?
Yeah, the freight issue, most of what we sell out of North America goes ex-works. We have the material ready, packaged, and then getting it picked up by the customer. It can be 5 days late, 7 days late by the time they finally show up. Getting material to Laredo for Mexico shipments is another problem. But the bigger problem for us is Canada. We are having a heck of a time getting freight to Canada and getting it delivered in a reasonable period of time. And it doesn't matter which trucker we use, it's all the same excuses, lack of trucks, weather, and it creates a situation where we're not meeting our customers' expectations.
So, John, you're not meeting customer expectations, but also I have to imagine this has a great impact on the bottom line. So can you talk a little bit about that impact, and let's leverage it a bit, and overall, what has exporting really meant to your business and to the bottom line today?
Exporting has become a fairly good part of our bottom line. It's usually about 20% of our overall total sales. And usually the offshore is particularly profitable because it's more opportunistic. It's where we have the material and they're not able to source it in the local marketplace. Unfortunately, though, some of these markets, due to COVID and due to the trade tariffs, have dried up a little bit.
And Barry, are you encountering the same? Really, what does exporting mean to your business, and what are you seeing as you're navigating, let's say, tariffs and the like?
We do a lot of importing of certain chemicals, and we would then ship those to our Canadian customers. Mm-hmm. It's become extremely difficult to do that because we're not competitive, and then we'll also have product made for us in the U.S. that we'll ship overseas, and it's frankly going to be impossible to export to China because of the duties. So we do need to get resolution on that. We had a situation the other day where it was cheaper to ship it from out of the U.S. We saw this into Canada from China than it was for us to ship it from the U.S. to Canada.
Wow. Dave, are you experiencing the same, and what are you seeing with respect to the bottom line?
Fortunately, last February, I ordered a lot of extra inventory. So last year was good. It was a surprise to find out that it's more trouble this year than last year. So I'm experiencing some trouble, like I mentioned before. One of the biggest issues differences I noticed as far as exporting is the cultural differences in Europe. A lot of our international customers are in Europe, and the acquisition rules and the regulations are different in Europe. And if you don't keep up with the regulations, sometimes your products need to be recertified. And also the acquisition thing. Like I said, 90% of our business is with the FAA and a Gulf with the government procurement regulations. It's culturally different over in Europe. I had an issue in Serbia where 2 years ago, we were issuing they issued a request for quote. And so we submitted it. And a couple months later, it came back. And we actually had to go over there, and they in person opened it up and read the values to everybody that was there of what the number was. And we had an Italian customer that I was really anxious to beat. And we figured out what their price would have been, around 60,000 euros was what the government was expecting. So we came in at 55. And the Italians came in at 70. And their wanted to win was they hired a Serbian lawyer to actually look at every piece of paper we submitted. And they required 20 certifications of this, and they all have to be stamped with the company seal or notarized. And he found one that was notarized but not sealed exactly. And so they tossed our bid out because we had one certification that was wrong. Fortunately, the Italians got kicked out because their price exceeded what the Serbian price would have been. And that came about because the exchange rate changed in the last week a little bit between the Serbian dinar and the euro. And the quotes had to be in euros. So they got kicked out. So both of them got kicked out. And so it was a couple months later that they decided what to do, and they were going to have a resubmit. The rule was you couldn't raise your price. You could lower it, but you couldn't raise it. For said, I'm left with the quandary. Well, the Italians know exactly what I was charging, so they're going to come in a little bit lower. So I actually dropped my price by about 1,000 euros. And when they opened it up and they read everybody's prices, the Italians didn't change their price at all. They stayed just underneath of what the exchange rate was, still 70,000 euros. And I was amazed. And then they had the same lawyer, and he spent 2 hours going over every single one. So their whole strategy over there was to kick the competition out. Forget how much it costs. We're going to bid the maximum we can and have our lawyers try to kick the competition out, which is never happened over here. I never saw anything like it. Usually you just try to get your best price and that's it, and they go argue. But that was a big cultural change. We actually ended up winning it. He did argue about one certification where they have a requirement that you have to specify that weren't convicted of bribery and that you're not part of the mafia or organized crime, and it had to be from the government. And it said if the government doesn't provide that, then you can self-certify. So I did, stamped it all over the place. And their lawyer looked at it, and he actually called the embassy in Belgrade to validate that the U.S. doesn't provide that sheet. And after that was done, we got the thing. So there is cultural differences that are totally different from what our experience here.
Wow, Dave, there's a lot packed in there. If I just unpack a bit from that story, running through our cross-border contracts, requests for proposals, price versus value, right? And actually going through negotiations and different phases of the negotiations. I think that that's important for our audience to really digest, because it's different from country to country and as we're crossing different borders. So thank you for sharing that story, and congratulations on that win. And also I applaud you for getting ahead of some of your orders, as you mentioned when you first started out with the story. It seems like you were able to forecast and see a bit ahead, so you could get some things out early. That's a great piece of advice for our audience, especially now with the limitations that we discussed. I guess, yeah.
Yes.
Barry, do you have a similar story? Let's stick with this theme. I love these great sales and these great contracts. Do you have a story you could share with our audience?
Without giving away the story, we probably have some good stories. We have a customer who merged and demerged, and we've managed to keep the business in Europe. And with Brexit and everything else, it was very hard to get approved, but once you're approved, you're in. We had to go through REACH for the product, and if most people know what that is, that's not our TSCA, but it's the European approval. And it took some time, and we managed to do it. And business is pretty good in that area this year, given that the sales were down last year. They seem to be improving.
Great. Thank you, Barry. It's interesting. We have to be mindful of the time that it takes. It's not just a simple contract negotiation, but there are various approvals, certifications that you'll have to go through that vary from country to country. So to make sure that we're baking in that time to go through those steps is critical, yes?
Yes, but I will say one thing. Our Tosca is becoming just as difficult as Reach for people coming in. And I hate to say that because that's an inhibition on trade both ways.
I guess, John, are you seeing similar growing complexities there?
Yes, well, the big thing about our success outside of Canada has been understanding the culture where we're trying to do business and getting either a local partner or a regional partner who understands the language and can take the request for a quotation and put it in language that we understand. We got a very nice contract in Panama at the beginning of the year, and we utilized our office in Monterrey, Mexico to help us because of the language barrier, terminology barrier. Had we tried to go it alone up here, I don't think we would have been able to secure the contract. And we have found that anywhere in the world where we're doing businesses, it's almost always facilitated through our global partners.
That's a great point too, John. You really touch upon the importance of collaboration and partnership and being able to leverage those partners. I want to come back to that question, but before we leave you, John, do you still have your eye on Latin America? You talked a little bit about Panama and Mexico.
Mexico's been very good for us. Mexico's been a steady performer, but I would like to go further south. And I've talked a little bit with our partners in Mexico about, do they have a plan or what would be the best way to do it? And we could incorporate that whole territory into theirs. Of course, I also was very high on Brazil this year coming back. But if you hear the news, I mean, they've got the worst COVID situation right now in the world. So I'm not as bullish on Brazil as I was.
Yes. We have to keep a watchful eye there and sending all positivity to Brazil because you're right, the numbers there continue to grow. Dave, I want to circle back to you picking up on John's point regarding the leverage of partners, because I know that that's something really important to you as well, and a bit of the secret of your success when you're expanding into new markets. So hoping you could share a bit more about your process for leveraging those partnerships, especially
exactly.
for,
Yes. Now we actually have a partner in Brazil and one in Europe and Spain, and a salesperson in the UK. And yes, it's important to try to understand the differences, not only cultural, but like you said, understanding the contracts. One thing I would like to say is that one thing that surprises me in Europe, I spent a lot of time, well, not last year, that's for sure, was that the Made in USA name actually means a lot more than I ever thought. Every time they go to consumers or grocery stores or go shopping, they always look at what country the product came from. Not so much USA, but they'll look, oh, this was made in Italy. That's good. This is not good there. This is made in Spain. This is made in Slovenia. They always look at what the country of origin is. They don't look at it, this is EU. They look at the specific countries and decide. And they said, if it's made in USA, that means it's good. Almost no matter what product it is. The other thing surprised me even about cars. I was in Croatia, and that's right across from almost Germany and Austria. And you see a lot of BMWs. You see a lot of Mercedes. And somebody I'm walking with looks, and there goes by a Jeep Cherokee. And they go, wow. And I said, well, what's special about that? And they say, that is the most prestigious, expensive car you can get over here. If you want to get the best and show off, you get a Jeep. And that just floored me. So yes, there are cultural differences that you really get surprised a lot of times.
Wow. And it's amazing as you travel from place to place, from country to country, city to city, what is defined by the word good, right?
Yes, exactly.
And Barry, turning to you now, you spoke about Canada. Have your views on Canada changed at all, especially given the new USMCA?
I think it'll help us a lot. But there's still just border issues that we have to resolve. Our Canadian business is growing. We're investing in it. We just added a warehouse in Canada. So we're very excited about it. And Mexico's next. And I just wanted to mention that I think it would help everybody if you start to put your websites in French and Spanish as you go into Canada, and understanding what you need to do locally. And the other key for Canada is to have boots on the ground.
So speaking of some of the border issues, we know there's a lot more. Right now with the pandemic, we see a lot of the country coffers that are really just drained, and budgets just to be able to meet them. It's a challenge. So generally a typical solution, and we heard it earlier in the day, is a hike in the taxes. We already see the UK has come forward in their budget to increase business taxes starting the year 2023. Surprised it's not even sooner. In the US, we know that our Biden plan is calling for a hike in the corporate tax rate as well. I know we're all eagerly awaiting some more details there. How are those increased tax rates and those tariffs and customs, how is that impacting your businesses on a look forward basis? How are you starting to plan for that? And I guess, Barry, let's start with you.
Well, in terms of corporate taxes, it is what it is. To me, that's inelastic. What makes the difference is tariffs into the U.S., out of the U.S., shipping to other places. USMCA is a great thing, but shipping to other countries, it will continue to be a problem until we address tariffs. They're a barrier to trade for us. We're really scaling up our business.
Dave, are you seeing the same?
Yes, as far as tariffs, it's not just the tariffs, it's the paperwork that keeps getting added on, trying to fill out all these forms. And like I said before about the different regulations with the REACH, and if you don't keep up with them, then all of a sudden the contract comes in and they have RoHS 3 requirement, where I hadn't even heard about it. We've been RoHS 2 and get certified, and then we have to rush around. But I believe that this is really causing a lot more paperwork and just a slowdown in the logistics. As far as the taxes, I kind of agree. It is what it is. And I'm really not that much opposed to it. We're going to have to pay for this debt somehow.
John, what are you seeing there?
Well, the tariffs have been a major problem. To give you a quick example, if we want to ship material to China, between the duty, the VAT, and the punitive tariff, it can be up to 43%. Which has kind of put us out of the game in China. I don't see that changing anytime soon.
Agreed. It's interesting. It's a bit deceiving, right? You hear the standard, business tax rate, but by the time you add on to it all of your international tax provisions, your indirect taxes, the cost with respect to tariffs, customs, boy, does that really impact your bottom line and hike up that tax rate even more to something in the tune of 40% or above. So that is not uncommon at all, John. I do want to turn to some of the audience questions here, given the time that we have left. And one that we have here, what are your top 3 lessons that you've learned from doing business as a result in the pandemic? And will you carry those lessons forward as we find ourselves digging out of the pandemic? And I guess here, let's start with you, John.
Okay, the top 3 lessons I've learned is you need to understand the culture of where you're going or where you'd like to do business. Find good local partners or good regional partners. Understand the export laws so you do not get in trouble. Make sure you're going to get paid, because it's not any good if you don't get paid, and you have to be patient. Selling cycle outside of North America is totally different than what it is here in North America. So patience is a virtue.
Thank you. Barry, how about you?
I echo many of John's things, but what we've learned during the pandemic, you can still kind of maintain the relationships. Zoom calls, Microsoft meeting calls late at night with overseas people or early in the morning are a must. You have to continue these relationships, even though you're not having dinner with them. I'll echo on the financial side to assure yourself that their credit's good, that you can do business with them. And biggest thing of all, to continue to have a good plan and continue to update it.
Thank you, Barry. And Dave, take us home. Tell us the lessons that you've learned.
Well, the number one is to watch your supply chains carefully. I mean, no matter how much you try to plan, you can get hit with shortages when the pandemic upset everything and boundaries shut down. And so you have to have alternate sources. That was it. Fortunately, I thought I covered it, but you can always, a plan always falls apart when the crap hits the wall. The other thing is, I agree with the culture thing, as I said before, is yes, it is different around the world how they do it. And a lot of places, yes, we've gotten by with the Zoom and everything else, but still a lot of business gets done face to face. And not being able to travel has had an effect. Yes, you can do it with the phone calls, you can do it with that, but a lot of business gets done face to face, especially with people when you're trying to start out with a new one. You can keep up with Zoom on the old ones, but trying to get new business without actually meeting the people that you're talking to is extremely difficult, especially with some of the cultures that exist in the world where they want to know who they're dealing with. And the last one is, I hope the air traffic gets back. My business is on air traffic, and a lot of the European companies have privatized, which means that instead of being government supported, they're supported by funds that they get when an airplane lands. And last year it didn't hurt, but this year I'm starting to see some people that are pushing stuff out if they have to do infrastructure changes. So it's been a challenge. I just hope that the end after this year, it's behind us.
We have our fingers crossed. It should be, Dave. I think we all can agree. I'd like to take this time and give a sincere thank you to Dave, to John, to Barry for sending your business insights with us today and for your time. Thank you so much, gentlemen. And Robin, back over to you.
Well, thank you, Tiffany. And there's never enough time for such a pertinent discussion on sharing on export opportunities. So again, Tiffany, John, Barry, and Dave, thank you so much for sharing your success stories and also advice for other exporters. And I will certainly echo the importance of solid face-to-face relationships. So we are almost at the end of this amazing program. And with this, I would like to hand it back over to Linda, President of the World Trade Center Greater Philadelphia. Thank you all for joining us. And Linda, the floor is yours.
Thank you very much, Robin. I'm always amazed after each of our global business conferences, the amount of information and insight that is shared. And if people can see the notes that I've written just on one page, well, I certainly have learned a lot as well. So I hope that all of you will join me in a virtual round of applause to all of our speakers and moderators, and of course to all of our sponsors. And a special thank you to our great MC, Robin. Terrific job in keeping the trains on time and keeping the discussion flowing. And of course, above all, I have to really say a special thanks to our great team at the World Trade Center of Greater Philadelphia, headed by our head of production, Graziella, along with Lauren and Susan and Dino and Dale, and team really, I believe, did a great job in putting together this conference in partnership with Temple University's Fox School of Business. I hope you agree that we packed a lot of information in just these few hours. I know that I enjoyed the presentations. I hope you did. And above all, because this is the goal of our programs, I hope you learned something new. providing access to quality information that will help you develop your business strategies, that will help you make sound business decisions. That is part of our commitment to you in guiding you as you look at new markets, as you look at expanding and existing markets. And a lot of that is dependent upon the connections that we help you to make through our authorized trade representatives. Pennsylvania has 12 authorized trade representatives representing markets worldwide, tremendous source of information. And also our World Trade Center networks of over 300 World Trade Centers in nearly 100 countries. And that brings me to two very special events that I want to draw your attention to in closing. And one is the General Assembly of the World Trade Centers Association that will take place April 26th through 30th of this year. This is an incredible gathering of 300 World Trade Centers, as I said earlier, from 100 countries. It will take place virtually, and it will include this year for the first time a virtual B2B platform that Robin and his team are in the process of putting together. And here is the good news, and I want to make sure that you take this away with you at the close of our conference today. All World Trade Center members are eligible to attend at no charge. And to take advantage of this opportunity, we are providing a special discount for new members. So if you are not a member and you're listening today, this is the perfect time to consider joining our organization. Later on this year, September 30th, we plan to, I'm very proud of saying this, see you in person at the Waterworks for our annual World Trade Centers Day Awards and celebration. So mark those two events on your calendar. It would be a wonderful way to celebrate in person together on September 30th. I hope you enjoy the rest of your day. We hope to see you soon in person on September 30th and right here at our office at One Penn Center in Philadelphia. Thank you very much for attending.